Welcome to the European Market Open, everyone. A minute to go until the start of crash equity trading in Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Energy emergency. Europe weighs crisis measures after Russia shuts the Nord Stream pipeline indefinitely. Gas prices surge once again. Risk reversal. The euro slumps to a 20-year low and European stock futures plunge as the US compounds inflation fears. Plus, Britain in the balance. Liz Truss looks set to win the Tory leadership race to succeed Boris Johnson and become the UK's next Prime Minister.
Yeah, two things. I mean, those are the things, right, Tom? It's all about the UK. Liz Truss as Prime Minister, what does she do? She's promised to act, but what does that mean in the detail? And then a lot of pressure on the futures because actually with that 35% rise in gas prices, Europe is scrambling to get through the winter.
And having to readjust to what happened on Friday when the data suggested, and the reporting suggested, that the flows were going to be switched on Saturday. And that's why you ended up in European markets in the green at the close of the week. But of course, the news came through towards the end of the day on Friday, overshadowing to some extent the non-farm payrolls out of the US, that indeed the Russians would be keeping Nord Stream 1 closed indefinitely. So the impact, of course, being felt right now as markets open. The Spanish IBEX down 137 points, down 1.7%. Ministers from Europe will be meeting for an emergency session on Friday to work through how to adjust to this. CAC current down 2%. We expect some real and significant bloodletting in German stocks, particularly the industrial players, the automakers. They gained quite significantly on Friday, again, on the expectations that gas flows would be switched back on. So watch the automakers out of Germany this morning. Gas futures, here they are. Gains of 20% on Dutch gas futures. The euro currently at 99, but it edged down to 98, the lowest level that we've seen in 2 decades for the single currencies. We look ahead to that decision from the ECB. Madame Lagarde on Thursday. Money markets pricing in about 65 basis points, so split between 50 or 75. Brent currently trading at $95 a barrel. To what extent will oil prices be sustained as markets, governments have to switch to pulling in more oil on the back of lack of gas out of Europe, currently up 2.5%. And the Hang Seng just noting pressure on tech stocks over in Asia, over in China, on the back of news that the US is considering further restrictions on investments in Chinese tech. Fran.
Tom, let's also get over to our Bloomberg MLive managing editor. He's Mark Cudmore. Mark, you're looking at G10 rates. Good morning.
Yes, good morning, Francine. Yes, absolutely. The story in Europe this year is very much about the energy crisis, but the backdrop story around the world is the rising rates in response to the inflation problem that is still ongoing globally and still seems to be underestimated. So this week, we have the Bank of Canada expected to hike rates 75 basis points, RBA expected to hike rates 50 basis points, and the ECB between 50 and basis points. Well, even if the ECB only does 50 basis points, the average G10 benchmark rate is this week set to surpass the 2011 level back to February 2009 levels. And you can see that since the pandemic, they slashed this, the average G10 rate, benchmark rate, not GDP weighted, just the average, straight average. It was cut down to zero across the world in the pandemic. It was stuck down there until very late last year. And then really this year, it's been skyrocketing. Now, what's important is this red line is where we expect it to be if ECB does only 50 basis points this week. This is not a cap. It's going to blast through that level. In the same way that back in early 2009, 2009, late 2008, we were being slumping rates in response to the crisis. We've got a different type of crisis right now. We've got inflation that central banks completely forgot to react to a year ago, deluded by transitory. They reacted too late, and that means these interest rates are going to go an awful lot higher and cause more pain to speculative assets and assets that sometimes depend on quite a lot of leverage in the system. And I think a great example of that is housing markets, and perhaps particularly the housing market in the UK.
Mark, I know for a lot of certainly UK students, it's back to school today. Is there anything that we should be looking forward to? If you're a market investor right now, is there anything that looks on the brighter side?
I think if you're going back to school, be delighted that you're in school and learning now, getting all your education, so that 3 and 4 years' time, you can buy super discounted assets with all your wisdom you've learned.
Okay.
That's great advice for the 10-year-old.
I like that advice. I know there's a lot of relief in my household that the children are going back, or at least the child is going back to school. Bloomberg's MLive Managing Editor Mark Cudmore, thank you very much indeed. Searching for a little bit of optimism as we see this rout in European equities. Now, Europe's energy crisis is deepening hours after G7 leaders agreed to implement a price cap on Russian oil. Intriguing time. And Gazprom reversed plans to resume gas flows through the Nord Stream pipeline. EU energy ministers are now preparing for an emergency meeting, that's on Friday, where a number of special measures to rein in soaring prices will be discussed. For more, we are joined by Will Kennedy, our senior executive editor for energy and commodities. Will, just walk us through, get us up to speed on what happened. We had that data flow suggesting that flows would come back online on Saturday. Of course, the shock announcement, that would not be happening. The impact across the energy space here.
Yes, it turned out to be a surprise and happened late in the day after energy had stopped trading for the day. So markets are responding today to the news that gas isn't coming back, and unsurprisingly, gas is much, much higher. The Nord Stream pipeline, which is the main link between Russia and Germany and carried a third of Russian gas into Europe, was already operating at far reduced capacities of about 20%, but even that 20% was really going to matter for balances over this winter. So now it looks like it's down and not coming back. Traders are having to readjust their expectations for how much gas the continent will have as we head into the colder months.
Well, I know there was that pretty ridiculous picture, actually, which looked like something, out of my bath, like this, this leak that didn't really seem like a leak. Is this it? Is it now, are we fully pricing in just like a gas embargo from Russia, or is there a possibility that it comes back online?
I think most people's expectations now that Nord Stream is shut indefinitely. Clearly that picture could be interpreted as a sort of pretty tongue-in-cheek way of Russia putting its point across, and obviously Siemens, who serviced the turbines involved, said that such a leak, although it may exist, was no reason to close the pipeline. So there's a lot of skepticism about all of that. I think attention will now turn to pipelines through the Ukraine, because a lot of people may not know that there is another route for Russian gas into Europe through Ukraine, again, at a vastly reduced rate. About half the pipelines there are shut down because of the war, but some gas is traveling, and I think people will now wonder how long that keeps flowing into Europe.
Well, thanks so much. Will Kennedy there, our senior executive editor for energy and commodities. Now joining us is Bloomberg's Christina Kina to talk about the markets, also with Wei Li, BlackRock Global Chief Investment Strategist. So thank you both for joining us. Wei, when you look at euro, okay, it's sliding. I think it's at the lowest in 2 decades. I can't see any positive news out there at all in Europe. Is there anything that we should be thinking about?
Well, it's hard to start on the positives on a day like this, but I would just note that if we're really searching for positives and noting that we're underweight European equities, I think the weaker euro could serve as a bit of a booster in terms of the export-oriented part of the stock market and the economy. But more broadly, we have been underweight equity market, developed market equities for quite a while, precisely because of this recession risk that is materializing, as well as central banks over-tightening. And both are starting to weigh on sentiment at this juncture.
Christine, let's bring you in at this point. The pricing, the futures had looked earlier in the session at drops of around 3%. You're not seeing that now. It's a drop of about 1.4%. Where are we in terms of the markets are pricing in a gas crisis, an energy crisis that would have been unthinkable even 6 months ago?
Well, Tom, I think we are still digesting through the news, as you say, but it has been particularly obvious in the euro. I mean, we did get below that parity level quite a while ago now, and did that repeatedly, and again, sliding below that 90 cent level for the first time in 2 decades. But yeah, if there is an asset that really bears the brunt of the challenges that Europe is going through right now, I would say it really is that currency level, because it's not only pricing in what we're kind of seeing playing out right now, which is that gas crisis really escalating here, but also longer term trajectories and fundamentals that are still deteriorating, primarily when it comes to what this all means for the terms of trade, which is increasingly worsening for Europe. That's quite the departure from a big support for the currency just a few years ago, when Europe did have more positive terms of trade, but that is less the case right now.
Tom, this is a picture that kind of, put Twitter alight. I think it was late Friday night.
You said this is what your bath looks like, which is a little concerning.
It is a little bit concerning. I mean, it does feel like a Soviet bath sometimes. I need to get that redone. But it does look, this is the alleged leak that actually Gazprom put out. And when you look at that, this is, of course, political, which, frankly, we should have been expecting. Could we have way better prepared for this? And does it mean that we're going to get zombie companies? Is it households, or is it actually businesses going under that we should worry about?
Well, I would say that even as we head into a recession, we're not looking at a balance sheet recession. So if you look at corporates, if you look at households, things are not as bad as they were back in the global financial crisis. So as we think about asset allocation, we're still looking at a preference for credit over equity. We're still invested. So, we're not expecting mass default, for example. So there are still ways to get, to stay invested and allocate your capital. But to your point about could we have been better prepared for this, I think I would note as we head into winter, the capacity has been increasing. Yeah. So economies have been preparing for some sort of energy constraint and the prospect of rationing. But obviously, compared to expectation at the beginning of the year, this is pretty close to the worst outcome. So as we head into the rest of the year, underweight equity, DM equity at this juncture feels appropriate.
Okay, Christine, let's bring you back in at this point. Currently, the FTSE 100 down 0.9%. Of course, we're going to find out who our next Prime Minister is by around lunchtime today, at a time of warnings around asset quality, at least the risk appetite for UK assets. And yet the FTSE 100 has held up as something of a hedge year to date. How are markets thinking about the political risks and the concerns around Liz Truss's fiscal spending, if indeed she becomes Prime Minister?
Well, Tommy, definitely a lot of questions about what the new UK Prime Minister is going to do on that fiscal front. And of course, a lot of questions as well about what it means for the Bank of England, because if you recall, I think that was one of kind of Liz Truss's campaign promises, was to kind of re-examine the Bank of England and its mandate, especially with regards to inflation. So that's going to be, I think, very key for markets moving forward, is what that is going to look like under a new Prime Minister here, if it is indeed Truss. And again, what that means for the Bank of England's process moving forward. I think they face similar challenges as the ECB in that they do have a limited window here to deliver those rate hikes that the economy very much needs, but still also grappling with the very real possibility that we could be staring down a recession, possibly early next year, maybe even toward the end of this year. And so very much a challenging time for the new UK Prime Minister, and as far as markets are concerned, is very much a negative welcome for whoever is going to be managing the country moving forward.
Yeah, and here's that dislocation between rates and the pound and sterling. Currently 114.66 as markets price in another 4% or so by the first quarter of next year, getting up to 4.5%. We're currently at 175 on the benchmark for the BOE. So even as rates are projected to go higher, the pound remains under pressure. Thank you, Bloomberg's Christina Keno, for walking us through some of the key market themes. And Wei Li from BlackRock, of course, Global Chief Investment Strategist. Stay with us. We'll get more of Wei Li's calls after the break. Coming up, the race to become the next UK Prime Minister does near that finish line. Then we're going to take a look at the many, many challenges facing whoever takes up residence in Downing Street. That is next. This is Bloomberg.
do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
What is your base case for Italy in terms of what happens politically and then what the economic fallout is?
Welcome back to the Open, everyone. Happy Monday, 14 minutes into the European trading day. Now, remember, it is a holiday in the U.S., so probably little volumes. I don't think there's much trade in treasuries. Europe scrambling to respond as gas surging some 35%. That's putting a lot of pressure, of course, on the euro sinking European stocks, also severely down, Tom.
Yeah, and it's that energy crisis, of course, that's playing into what's happening across some of the utility energy providers. We can zero in now on a couple of the stocks to watch the movers today. Uniper, of course, the major utility over in Germany that's had a bailout from the government. You're seeing natural gas prices, Dutch gas prices, of course, soaring today on the back of that news. Uniper under pressure. You can see there a drop of more than 9%. There's also this windfall tax as well that the German coalition have agreed on to fund, at least partly fund, that $65 billion funding plan from that government. CSP Countryside, this is a UK developer. This is a deal with Vistry worth about 1.25 billion. It's a stock and cash deal, gaining on the back of that 6.5%. It's a premium, the deal, the price from September, the end of Friday, the last week, of course. So investors welcoming that move, that merger. Volkswagen, the members of the board are going to be discussing today the IPO plans for Porsche, one of the most hotly anticipated IPOs of the year. If it comes through, market conditions, of course, notwithstanding, it would be and have a value of about $85 billion. So we're waiting to hear what happens on the back of that board meeting later today from Volkswagen around the Porsche IPO, currently down 2%. Fran.
Now, Britain will have a new prime minister tomorrow. Either Foreign Secretary Liz Truss or the former Chancellor Rishi Sunak will be named as the next Conservative Party leader at lunchtime today. And then they go to see the Queen in Scotland in Balmoral. And then they start work tomorrow. Joining us now from Downing Street is our very own Lizzie Burton. Lizzie, talk us through the choreography, actually, of the next few days.
Well, Francine, you can hear perhaps the protesters are here already. We're expecting the result at 12:30 London time today. This is going to be the fourth Prime Minister in 6 years in the UK, and it's likely to be the third female Prime Minister in British history, Liz Truss. Then the next step will be that she'll go to Balmoral, the Queen's Scottish Highland estate residence, to meet the Queen. So will Boris Johnson, but they'll fly separately. It's a break with tradition, but needs must, given the Queen's mobility issues. And then she'll come back and give a speech here at Downing Street. Again, a break with tradition. It could actually be behind the black door this time, but the expectation is that she'll focus on the urgency of the cost of living crisis. Then on Wednesday, she'll meet with her new cabinet to discuss how to deal with this crisis. She's expected to unleash a programme on the similar scale of the COVID furlough programme. And then she'll face Prime Minister's questions for the first time as Prime Minister in the House of Commons. But really, The challenge changes once she's in to staying there, because she'll have Rishi Sunak and Boris Johnson on the backbenches. She'll have to keep an eye out for whether there could be a confidence vote at some stage. But she's also going to have to pivot from appealing to the Conservative Party members, this very narrow group that have been voting so far, to appealing to the general public, because there's meant to be a general election by January 2025.
Okay, Bloomberg's Lizzie Burden in Downing Street with a preview of that announcement. Towering over everyone else as well, by the way. That tiny little man, just the left of Lizzie's shoulder.
You can't stop looking at him, right?
Somewhat distracting, yeah. Like a mini-me down there. Wei Li, let's bring it back to the asset risk and the financial risk around the UK. Because we heard from Charlie Bean, former BOE economist, about the concerns that investors would turn their backs on what's happening in the UK if Liz Truss comes through with her proposals. Now, you remain overweight UK gilts. You're saying the markets are pricing in too much of a hawkish move from the BOE, as markets are looking at now 4.5% for the first quarter next year. Just unpack that view for us. Overweight UK gilts.
Well, more broadly, it's really hard to be constructive about the UK universe at this juncture, equities in particular. And if you think about us heading into a recession, I would observe that actually Bank of England is perhaps the most brutally honest among all the developed markets, central banks, in terms of the very, very tough trade-off between growth and inflation as they look to bring inflation down, right? Like BOE is the only central bank that forecasts a prolonged, deep recession as they start hiking rates and as they look to bring inflation back down to 2%. And at this juncture, we believe that actually the already very slow growth momentum, as well as the energy crises, may well do some of the work for the BOE to the extent that they don't have to go all the way that they forecast to bring inflation back down over the course of next 18 months or so, which is why we're overweight gilts versus the peak rate pricing of about 4%. Actually, we don't think they will go there. At some point, they will realize actually the work is already being done for us, the energy crisis and all of that. And
wait, the fact that Bank of England, it has been actually, you're absolutely right, like so honest about the really tough work. Does that help market traders to understand the thinking and the fact that actually, because of supply shock, what they can do is very limited? Or does it help businesses in managing expectations?
I think it's very difficult to compare the situation in the UK, BOE, as well as the situation with the situation in the US and the ECB because of the politics that is going on in the UK. So a lot of the central bank narratives has been somewhat poisoned by the political development that is acting as a bit of a noise. But everything else being equal, I would say though, being very blunt about the tough trade-off between growth and inflation, and really, really clear that in order to fight inflation, we're going to be looking at a deep recession that would be helpful in managing market expectation and certainly on the business side as well. But it's hard to compare the BOE with the Fed and the ECB just because of the politics.
Does the ECB go 75 later this week? And is recession now inevitable?
That's our expectation, 75 bips later this week, but they wouldn't go as far as market pricing in terms of peak rate of 2.5% in our view, because at some point it will be clear the cost of hiking rates on the labor market and also on the economy. And our base case, in the case of the euro area, is recession this year and recession in the US next year.
All right, not a rosy picture. Wei, thanks so much. Wei Li, their Global Chief Investment Strategist at BlackRock, joining us with some really good calls, of course, not only on gilts, but some of the other things, for example, in European equities. Coming up, we have more on Europe's energy crisis, that the EU also weighs special measures to rein in soaring energy costs. That's coming up next, and this is Bloomberg.
When you think space, you probably think One space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
The top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrow. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
It's not a surprise. Nobody should be surprised by this very last decision of the Russian government. We need to be prepared for a total cut of gas supply from Russia.
Well, the French Finance Minister Bruno Le Maire, they were speaking to Bloomberg on Europe's looming energy crisis. That was at the Ambrosetti Forum in Italy over the weekend. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Vistry Group has agreed to buy Countryside Partnerships in a deal that values the embattled UK home builder at about £1.25 billion. The cash and share deal has been recommended by the boards of both companies and comes at a premium of around 9% on Friday's closing price. The UK is among the potential sites for Prologium's $8 billion factory that would build a new generation of EV cells. The Taiwanese solid-state battery startup is looking at options across Europe, the US and Asia. Solid-state batteries promise reduced charging times, longer driving ranges, and unlike conventional lithium-ion batteries, no fire risk. Citigroup has joined rivals in trimming its mortgage workforce as rising interest rates continue to weigh on demand for US housing. A source says the job losses total fewer than 100 positions. The bank originated $7.2 billion in mortgages in the first 6 months of the year, down 15% compared with a year ago. That's your Bloomberg Business Flash. Tom, Francine.
Laura, thank you very much indeed. Let's check in on your markets then. 25 minutes into the trading session here in Europe. You're seeing losses across the benchmark of 1.7% or thereabouts. Less bad than the futures suggested, but still, of course, a pretty significant downside. The most acute selling being felt over in Germany, down 2.9%, led by autos. Autos, that sector, down by 3.4%. Of course, the cutoff of gas, Russian gas via Nord Stream 1, is the central factor there. The single currency continues to be under pressure, down currently a little over 0.4%, Francine.
I mean, there's a quote that really is sticking to my mind by Rodrigo Catrell saying, no gas for Europe means no growth and a hawkish ECB. I mean, things, I guess, we're looking at worst case scenario, and so you could really potentially see a 75 basis point hike from the ECB going into severe slowdown because of gas prices.
At a time when you're looking at potential blackouts and rationing of gas. Very, very ugly indeed. The importance of that meeting then on Thursday for Madame Lagarde. Coming up, as Gazprom reverses then those plans to resume gas flows through the Nord Stream pipeline, the Friday shock, European leaders prepare for an emergency meeting. That is later this week. We've got more on that story next. This is Bloomberg.
Facebook but like your friends? If you live in Europe, your life might be about to get a whole lot easier. Starting in 2024, the European Union is going to require big tech companies like Meta and Apple to make it possible to send messages between their messaging apps. That might let an iMessage user chat with a WhatsApp account. The technical name for this is interoperability, and it's part of the EU's Digital Markets Act, legislation intended at loosening big tech's grip on the digital market. The EU's thinking is that messaging locks users into the tech giants' platforms because leaving WhatsApp or Facebook Messenger means losing the ability to communicate with all your friends. But thanks to the EU, you'll be able to send a message from a smaller competitor like Viber to someone using iMessage. And if every company signs on, then you might be able to communicate with everyone using just a single messaging app. This change clearly would make life easier for consumers, but it's quite controversial. Some technologists think it could break end-to-end encryption or stifle the innovation that makes messaging platforms fun. And if smaller companies like Signal or even the big tech companies decide they don't want to use these new technical standards to connect their massive messaging platforms, some argue the law is completely useless. It will take several years before the EU's rules go into effect, but if this new interoperability requirement works, it could have a huge impact on big tech's behavior and the way you communicate. And of course, where the EU leads in terms of tech regulation, the US often follows.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
One 30 minutes into the European trading day. Here are your top stories. Energy emergency. Europe weighs crisis measures after Russia shuts the Nord Stream pipeline indefinitely. Gas prices surge again. Risk reversal. The euro slumps to a 20-year low and European stocks plunge as the energy crisis compounds inflation fears. And Britain in the balance. Liz Truss looks set to win the Tory leadership and succeed Boris Johnson as Prime Minister. Tom, you look at the markets and things aren't looking great at all.
There's the time frame when it comes to the gas capacity that's been stored in Germany, other countries in Europe, how long that's going to tie companies over for, and to what extent you have to start factoring that in as an investor and start pricing that in. A drop of 1.4% across the benchmark. The futures have been pointing a lot lower, so it's less bad than the futures have suggested. But given that you ended Friday in the green, on the back of expectations that that gas flow would come back on Saturday, that is the reset. The DAX down very heavily, though, off 354 points, and it's the auto sector that is bleeding significantly, down more than 3%. We'll look at that shortly. Down 2.7% for the DAX. The FTSE 100 just being held up because energy and basic resources, last time I checked, were the only two sectors in the green, but still down 0.7%, waiting for the announcement of the next UK Prime Minister around lunchtime UK time. Energy, as I said, gaining 1.2%. Basic resources up 0.5%. Iron ore being bid in terms of prices today on the back of some news around the property sector in China. You're getting to peak build season. Even as those regulatory squeezes continue, maybe there's going to be a little upside in terms of demand for iron ore, which has been under pressure over the last few weeks. As I said, autos really being hit hard, down 3.3%. That's the main drag on the DAX, of course, but tech also lower. Bonds being sold off, yields are higher across the European debt space. Right, let's get to more details on the energy crisis, which is deepening, of course, hours after the G7 and leaders there agreed to implement a price cap on Russian oil. Gazprom reversed those plans to resume gas flows through the Nord Stream pipeline. EU energy ministers are preparing for an emergency meeting this Friday where a number of special measures to rein in soaring prices are going to be discussed.
Now, it's also led to Germany, the country most affected by the Nord Stream cutoff, announcing a package over the weekend to protect consumers from soaring costs. One of the steps Scholz may take in tapping windfall profits generated by energy companies.
And we will make sure that no such excessive profits can continue to be used by skimming them off in a way, as in the case with the EEG levy, only in reverse. And we will use the many billions that we raise in the process to relieve the burden on citizens with an electricity price break that helps ensure that citizens can also use a basic supply of electricity at cheaper prices.
Now, for more, we're joined by our Berlin Bureau Chief, Birgit Jennen. Birgit, exactly what is the crisis plan right now for Germany?
Well, there are plenty of different measures. I mean, the plan yesterday presented four C's. On the one hand, a kind of aid packages for a number of different groups in society, basically for students, for pensioners and families and households. And then it also has a plan basically to cap electricity prices. And for that, it really needs extra profit. It hopes to have used the extra profit, and that's what we heard just before, from, for example, renewables, which are just currently benefiting from these high prices. And that is something the German government is currently really discussing on the EU level to get this really going.
Okay, so there's the German policies and then there's the EU-wide measures. Birgit, this is the third round of measures from Olaf Scholz, the Chancellor, of course, with the backing of the coalition. Will it be the last?
That's exactly a very good question. I mean, the thing is that really the energy crisis hasn't yet hit so much the consumer. We do expect this to happen in the winter. So really, we have to see what's coming really after the winter and whether the government will then really need to stock up. Because so far the measures are nice, they will help somewhat. But really, whether it's going to be enough to really to stop social unrest, we do have to see this later on. But it was sort of capped also by the German finance minister, who said he wants to keep the constitutional debt limit next year. So therefore, more couldn't be done at the moment.
Okay, so capped by that debt limit, but the very real prospects of social unrest in Germany and elsewhere is the concern. Thank you, Birgit Jennen, our Berlin bureau chief, breaking down the response there from Olaf Scholz and the coalition. Joining us now for more analysis on the economy is Silvia Ardania, who is the head of European Economics Research at Barclays. Silvia, thank you for joining us. As you factor in then the fiscal response from countries like Germany and others to this evolving crisis, how does that play into your views on the trajectory for the Eurozone economy? Is a recession now unavoidable?
Good morning. Yes, we think a recession is unavoidable. We actually had a recession forecast since many months, even before this news that we had on Friday from Gazprom. We are now obviously expecting that the recession will be deeper and will be more prolonged because these additional cuts from gas will have to be compensated with some decline in economic activity.
What does that, Silvia, good morning. It's also Francine here. What does that declining economic activity look like? Is it, companies going bust? Is it 30% of companies having to go under, or can they have enough support fiscally?
Hi, Francine. Good morning. Well, definitely we expect some fiscal support. Governments have shown that they've already taken some this year, more or less of the tune of 1.5 percentage point of euro area GDP. Some countries have done more, some have done less, and we expect support to continue to be targeted. When we think about the depth of the recession, I think there is a very nice IMF research paper that has been published in July, and you can see that initially part of the cuts in gas consumption can come through activity that do not harm economic growth. But the more so, such as, lower the thermostat, switch off lights at night in cities. But obviously, the more you need to save, the more you need to have some cuts to production. And elasticity would suggest perhaps some, peak to trough decline in GDP of around 1.5, 2 percentage points, 3 percentage points. That should be the order of magnitude that the IMF study suggests be consistent with the decline in energy flows from Russia.
So, Silvia, we have the ECB decision on Thursday. We were speaking to BlackRock earlier in the show. It's their expectation that the ECB, that they will go 75 basis points. Do you share that view? Can they go that far? I mean, the context being the BlackRock think they pull back after that they front load these rate hikes.
Look, we think exactly the same. We have a 75 basis point forecast for this meeting. We said it's a close call. And this because we already, even before this news, right, we heard different comments from governing council members. Certainly the executive board member Schnabel seems to suggest and push for 75, while the chief economist Lane suggested that it was more in favor of smaller but, more continuous and consistent rate hikes. So close call, but the fact that we are starting a very low level and 75 basis point deeper rate will still imply that policy stance is in the accommodative regime, make us think that at the margin 75 is more likely than 50.
How much of a disaster, Sylvia, could that be also for euro? So how much lower can euro go, given that the ECB is basically hiking 75 basis points into a pretty, what could be a possible very severe recession?
Look, the euro, my colleague Stamos Fiotakis, the head of research here, they've done a great study, which they basically showed that a lot of this depreciation of the euro has been due to the gas situation. And so until we have some solution to this, it's it's difficult to see a reversal move, whether the ECB hikes 75 or 50. So there is the growth differential, there is the interest rate differentials, but really this energy story seems to be very important. And if you think through this is a negative in terms of trade shock, perhaps this will also imply that the equilibrium level of the euro will have to be lower to try to compensate for this loss in competitiveness that European firms face.
Sylvia, as we switch focus to the UK, we still don't know exactly what Liz Truss is going to do, if she is, of course, and she has won this contest, but there is concern about the inflationary impacts of her at least broad brush plans. The market's pricing in 4.5% from the BOE by the first quarter of next year. Is that realistic?
Look, we have a much lower terminal rate that the market is pricing right now, and this because, again, the Bank of England as well faces a pretty sharp trade-off between inflation and a reduction in economic activity. As you said, we still don't know very much about the fiscal prospect. This will clearly be important. Obviously, a more expansionary fiscal stance might require more, aggressive monetary policy response than the one we currently factor in. But at the moment, we are much more dovish than the market on the terminal rate.
Sylvia, thank you so much. Sylvia Ordagna there, head of European Economics Research at Barclays. Now, coming up, Britain will find out the name of its next prime minister later today. As economic problems mount, whoever gets the top job could, of course, be in for a very short honeymoon, if any honeymoon at all. We're live in Downing Street next. This is Bloomberg.
Inside the boardroom. Let's suppose you win a proxy fight and or you just get invited onto the board. You go to your first board meeting and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we presented with the plan.
Watch Bloomberg Surveillance Early Edition for the news you need when you need it.
I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London.
I'm going to be watching retail earnings from both Home Depot and Walmart.
Then surveillance for in-depth analysis.
Alongside Tom Keane and Lisa Abrambitz, I'm Jonathan Ferro.
Across the board, these are good numbers.
And a big headline there is reaffirming the outlook.
How much does this give faith that you can get some sort of resurgence in consumer spending?
Bloomberg Surveillance. Be informed, be prepared, be ahead of the game. Welcome to the world of decentralized finance. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
Welcome back to the Open. 43 minutes into the European trading day. You're seeing losses of 1.5% across the benchmark. Here in the UK, slightly less bad, down 0.8%. That's because energy and basic resources are the two sectors that remain in the green this morning. Talking of the UK, Britain will find out the name of its new Prime Minister later today, with Foreign Secretary Liz Truss expected to beat her rival, former Chancellor Rishi Sunak, and be named Conservative leader. The result of the ballot of party members on who they wish to succeed Boris Johnson is due at 12:30 p.m. Joining us now from Downing Street is Bloomberg's Lizzie Burden. Lizzie, what can we expect then from Prime Minister Truss, if indeed she wins?
Well, Tom, Liz Truss's priorities are going to be shaped by the crisis that she inherits. There's not really a historical comparison since the early 1970s when you had the oil shock and the miners' strike. She's got double-digit inflation to contend with. Goldman sees it rising above 22% next year. The Bank of England sees a recession on the way, and you've got workers striking across sectors in the economy. So to deal with it, Truss has said that she prefers tax cuts over handouts. She wants to take on the economic orthodoxy at the Treasury and the Bank of England that she calls the blob. And she blames the BOE for the inflation crisis. She says she wants to review its mandate. Now, markets have already shown their concern about all of this. We've had former Deputy Governor of the Bank of England, Charlie Bean, on this programme, warning of a crisis in gilts and sterling. And even some of her own supporters have warned that her tax cuts, defence spending rises, subsidies for energy don't really add up, and that it was amateurish to rule out tax rises. But really, as Charlie Bean put it, yes, she may have had to appeal to the Tory members so far to get to this position if she does win, but it's the markets that will punish bad policies of whoever's the PM.
Yeah. Is there any chance, Lizzie, that it's not Liz Truss as Prime Minister?
Of course, Francine, and as you well know, British politics is known for its surprises, so let's not fully write off Rishi Sunak yet, but there is a palpable change of tone in the UK press over the weekend from what Liz Truss would do to what she will do as Prime Minister. All the polls indicate that it was over a long time ago for Rishi Sunak. He has taken the difficult choice of giving the hard realities of the economy, whereas Truss's message has been much more optimistic, much more positive, really taking on the baton from Boris Johnson in that regard. But also Rishi Sunak's resignation, along with that of the Health Secretary Sajid Javid, was seen to have triggered the wave of resignations that led to Johnson's downfall. And so among the members with whom Johnson remains popular, he has been painted as a traitor.
Thank you so much. Our Lizzie Burden there live in Downing Street. Now for more, we're joined by Professor of Politics at the University of Strathclyde, John Curtis. Professor, thank you for joining us. When and if Liz Truss is Prime Minister tomorrow, she'll then go to the Queen of Balmoral. She'll be appointed as Prime Minister. She says that in the first week, but we don't have details, she will fix the energy price. What's the right way to go around this, or at least give support to households for energy?
Well, if we operate within the frame that Liz Truss has set for herself, which, as Lizzie was just saying, was tax cuts, not a handout, we've never had any intimation throughout the whole of the campaign, despite the way in which the cost of living crisis has grown, that Liz Truss is minded to abandon her tax cuts. Indeed, she was still defending them on British television yesterday morning. So I think we certainly are anticipating the tax bit, which is not increasing corporation tax, reversing the increase in national insurance, and then on top of that, probably she will abandon VAT on fuel as well as the so-called green levies. The interesting bit, however, is what does she do to the handout side? Now, it's been very clear for the last 2 or 3 weeks that the government would need to respond to the cost of living crisis by doing something that ensured that at least the less well-off in our society could cope with an increase in energy prices that would put many of them in extreme financial difficulty. The interesting thing, perhaps, is that the noises that are coming from those allegedly close to the Prime Minister, or the expected Prime Minister, is that they may go for something not dissimilar to what the opposition parties have been calling for, and some inside the energy industries, which is essentially for some kind of price freeze. The attraction of that to her politically, while it might mean having to do something rather close to that of the opposition, is that perhaps it therefore means that she won't need to do so much in actually putting money into people's bank accounts, which could be labelled as being a handout.
Yeah, and she's ruled out windfall taxes for now. We have to, of course, pass, as you suggested, what is the red meat for the backbenchers, the red meat for the members of the Conservative Party, and what is actually going to be implemented practically when she becomes Prime Minister, if indeed that is what happens. When it comes to her polling, her popularity outside of the Tory party is pretty dire. According to YouGov, 12% of Britons expect her to be a good or great leader. 52% expect her to be poor or terrible. How does this position the Conservative Party at a time when Labour have, what, a 10-point lead in the polls?
Yeah, the Labour Party is about 9 or 10 points ahead. The Conservatives are in as much electoral difficulty now as they had been at any point since December 2019, when Boris Johnson won his majority. And yes, in choosing Liz Truss, Conservative members have chosen somebody who was the more popular of the two amongst those people who voted for the Conservatives in 2019, although even that popularity, certainly according to Opinion in yesterday's Observer, has gone down quite markedly, and rejected the person who was more popular amongst those who were not Conservative voters in 2019. So certainly a challenge to her will be to how she can indeed widen the Conservatives' electoral support, and in particular, and perhaps quite remarkably, around 1 in 3 of those people who voted Leave in 2016 and voted Conservative in 2019, which was the absolute bedrock of Boris Johnson's success in 2019, they're no longer supporting the Conservatives. So she's got to work out how to get back those Leave-inclined Conservative supporters. Now, the one thing we know about them...
Professor...
Is the one thing we know about them... Sorry, go on.
Yeah, how much of what Liz Truss has promised can she actually deliver once she's Prime Minister?
Well, I think that comes back to the conversation you were having earlier about the markets. I think she is determined to implement the tax cuts. She is now finding herself having also perhaps to spend more money on the price fees, although she might try to do it in a way that means it doesn't immediately go onto the government's books. And then the question will be, will the markets tolerate this or not? And the truth is, at the end of the day, the one thing that we do know, well, it's very, very difficult already to see how this government is going to win the next election. A government that presides over an economic shock, even if it's not its fault, rarely managed to win the next election. If on top of that, this government were to find that actually the patience of the market has been pressured too much, that the value of the pound falls quite heavily, interest rates go up, well, no government at all has ever survived a run on the pound when it comes to the next general election. So she may, if she's going to succeed, basically she's making a bet that in the end, her tax cuts are going to deliver the economic growth and ultimately an improvement in living standards that she claims it will do. But of course, many amongst economists are somewhat skeptical as to whether or not that's going to happen.
Yeah, really, really fascinating insights. John Curtis, Professor of Politics at the University of Strathclyde, ahead of the announcement as to who will take over as leader of the Conservative Party and, of course, Prime Minister. Thank you for joining us. Coming up, BNP Paribas Chief Economist William de Wilde on markets. That interview is next hour. Stay with us. This is Bloomberg.
prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open, everyone. 54 minutes into the European trading day. Again, Treasury is actually not open today. It is a bank holiday in the U.S. If you look at the markets here in Europe, look at the DAX, down 3.2%. This is because gas prices have risen 35%. We understand Nord Stream is not reopening. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. The results of the contest to succeed Boris Johnson as Prime Minister will be announced today, with the winner taking over after a meeting with the Queen tomorrow. Foreign Secretary Liz Truss is the odds favourite to win and will come into office facing a brutal economic storm. China has extended its lockdown for most of Chengdu's 21 million residents, with all indoor entertainment venues, schools and dine-in restaurants remaining closed. All of the country's 31 mainland provinces recorded at least one local COVID case over the past 10 days, reflecting the broadest outbreak since at least February 2021, when disclosures started. Voters in Chile have rejected a new constitution that prioritized social rights and the environment, dealing a blow to a 3-year campaign to temper free market policies. With almost all ballots counted, 62% rejected the plans, which opponents argued would hurt growth and development. The U.S. climate envoy John Kerry says Russia's president has weaponized fuel by restricting energy supplies to Europe. Speaking exclusively to Bloomberg in Hanoi, the former Secretary of State also told us about the prospects for re-engaging with China in the fight against global warming.
I remain hopeful that they did say they would suspend. That means that it could open at any given time. My hope is that President Xi will recognize the benefit of getting both of us moving in the same direction, leading to Sharm el-Sheikh. The world needs a positive message.
Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Laura Wright, thank you very much indeed. Here in the markets, the benchmark European stocks currently down 1.7%. Futures stateside range-bound, euro-dollar currently off by, around 0.4%, Francine?
Yeah, that's it for the European market open surveillance. Early edition up next. We'll talk, of course, UK politics. It's also a big day for energy. This is Bloomberg.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Ferro. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Nobody should be surprised by this very last decision of the Russian government. We need to be prepared for a total cut of gas supply from Russia.
The European Union has to react to the Putin's challenge as we did 2 years ago on pandemic. And I think we succeeded 2 years ago. We have to succeed today too.
If we want to be consistent with the policy of sanctions, there is a need to cap the oil price. Seems to me to be the right direction.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Europe weighs crisis measures after Russia shuts the Nord Stream pipeline indefinitely. Gas prices surge again. Risk reversal. The euro slumps to a 20-year low. European stocks plunge as the energy crisis compounds inflation fears. Plus, Britain in the balance. Liz Truss looks set to win the Tory leadership race to succeed Boris Johnson and become the UK's next Prime Minister. So it is quite a busy day, very busy day. I know volumes could be a little bit thinner than usual because it is a bank holiday in the US, so a lot of cash equities and treasuries are closed. The one thing, though, we need to look at is, of course, the energy prices going up some 35%, and what that does to European stocks, down 1.7% overall. The DAX down 3%. Euro dollar, check this out, 99.09. It's at a 20-year low. Again, how much lower can euro go? Quite a lot if you look at some of the technical analysis by some of the banks. Now, European natural gas futures, you can see gaining 28%. Earlier, they were actually gaining up 35%. Let's also go to the European map because it really is the DAX, because of the proximity to Nord Stream, that will have a bigger, much bigger impact to what we saw because of Nord Stream 2. We saw that picture of the gas leak by Gazprom, the DAX down 3% lower. The UK also big here day because at 12:30 p.m. UK time, we know who the next Prime Minister is. They'll have a lot of concerns on the economy, a low pound, but also possible zombie companies that they need to deal with. Now, Europe's energy crisis is deepening. Hours after G7 leaders agreed to implement a price cap on Russian oil, Gazprom also reversed plans to resume gas flows through the Nord Stream pipeline. Now, it's also led to Germany, the country most affected by the Nord Stream cutoff, announcing a package over the weekend to protect consumers from soaring costs. Now, one of the steps that Scholz may take is tapping windfall profits generated by energy companies.
And we will make sure that no such excessive profits can continue to be used by skimming them off in a way, as in the case with the EEG levy, only in reverse. and we'll use the many billions that we raise in the process to relieve the burden on citizens with an electricity price break that helps ensures that citizens can also use a basic supply of electricity at cheaper prices.
Now, for more, we're joined by our Berlin Bureau Chief, Birgit Jennen. Birgit, how prepared is Germany for this?
Well, I mean, one has to keep in mind that really this is a scenario Germany wanted to prevent all day long since the war started, that a full cut of gas is not going to happen. This is what Germany has prevented as a sanction mechanism. So therefore, I mean, it is certainly a very difficult situation. What the government has so far presented are kind of compensation measures for the consumers so that really the public unrest is not going to unravel in the middle of this crisis. So there are some measures which help, for example, students, households, families with children and low-income earners. And then what we just have heard, also there is the price cap on electricity and financed by kind of an instrument to use kind of excess profit from rising energy to finance part of these measures.
Sir, Birgit, what happens next? How much support can the German government actually give to businesses and households to get through this?
Well, the support given so far is probably going to last for at least until the winter. But really, I mean, what we are hearing is that really industry is really a little bit frustrated with the government proposal, because if you really look closely at the blueprint from yesterday, there isn't much in there for industry at the moment. I mean, we have seen that Uniper really needed an aid package of already 15 billion, and we do hear that other companies are equally suffering, and it's also totally unclear as to whether it's enough for Uniper. But so far, the government hasn't given any indication of what is going to do in terms of helping industry getting through the crisis. So this is certainly something we have to be watching over the couple of next weeks.
Birgit, thanks so much. Birgit Jennen there, our Berlin Bureau Chief. Now, we're also joined to talk about the markets. Willem de Wilder, he is a Chief Economist at BNP Paribas, and Christina Kino, our markets editor. So thank you both for joining us. Christine, let's just start with you. And if you look at what the market is worried about is, of course, energy prices. Is now the worst priced in because we have this cutoff and we're expecting it not to come back online, or could energy prices go even higher?
Well, Francine, I think now is kind of just the market digesting through the immediate news, right? But I think there is potential for this to go either way, really, depending on the sort of response that we're going to be seeing from European governments moving forward. I mean, I think, you know, on the topic of silver linings, which I know you're very keen to hear about, that is one silver lining is the fact that Germany is now kind of implementing these new measures, right, to support the economy, because that is ultimately what would help kind of mitigate some of the just the many problems that Europe has, whether it's on the energy crisis side of things or on the inflation side of things. It'd be a big help to both households, the ECB, and markets in general if we do see these moving forward.
Yeah, and Willem, I mean, we're trying to really, William, and figure out exactly what the next 6 months will bring, right? It's the first week in September. How much should we worry about the European economy? Is there anything that could cushion the blow?
Well, the only positive thing I would mention is that we still have the investments of Next Generation EU. So that is still happening in the background. For the rest, it's all limiting the damage. We have another stagflationary shock now. And we have, in addition, the interest rate tightening by the central bank. And what is also striking to observe is that new order flow at companies is declining as well. And it means that I think what we're underestimated, echoing with what is said earlier by your Berlin colleague, is that what is the impact going to be in a lasting way on companies? And there I'm very concerned.
What does that mean with I'm very concerned? Is it how many companies, what percentage of companies could actually go under? Is it zombie companies because of interest rates rising, or that they just can't pay energy prices?
Well, I'm not able to put a number on it, but you know where the sensitivities are. Clearly, you have one, the interest rate shock, and then you have the energy sensitivity, the energy shock. But what is important, however, is that we have an impact in terms of the cost base going up because of energy. We have wages which are increasing, and okay, one understands why that is the case. And then on top of that, demand is softening, demand indicators. Now, the thing that is striking most, if you look at the survey data, is that for the time being, hiring intentions of companies remain elevated. And the concern that you can have for the winter is that finally that will also start to go down. What that means is that it will give another knock at consumer confidence.
Christine, what does this mean for euro? First of all, euro at a 20-year low, and it could go even lower.
Absolutely, Francine. I think, even when it hit below parity over the summer, right, like there was already this talk that it could go much, much lower than this. And I think it really is clear the direction of travel for the euro at the moment is even lower. It almost seems like the level right now is not as relevant as that broad direction. And, this is what we're seeing now, right? We're what, a 99-cent handle at the moment, which was really kind of unthinkable, maybe even like 6 months ago, but here we are. And I think that is that downward pressure continuing until we see some kind of a situation where there's enough bad news that it turns into good news. And again, by that, I mean, when governments step in and provide that fiscal support, like that is, I think, what investors and just people in general are kind of waiting for at the moment.
Yeah, and Willem, I guess this goes back to, if you look at the world economy, what's the possibility of a recession there globally?
Well, you have U.S. that is clearly showing signs of starting to be hit by the rate hikes. You see that in the residential construction markets. The survey data are still holding up well, but they have to come down. That is also, by the way, what central banks does after, what the Fed is after. Europe we discussed. China is very soft, maybe a bit better in the remainder of the year following policy efforts, but otherwise it's very soft. And then you look more broadly speaking at developing economies. They, of course, are suffering from the hit of slower demand with their major trading partners. Let's not forget that new export orders across the globe have been on a declining path, if you look at the PMI data, for several months. So what you have is that it is a generalized slowdown, and you do not really see in the very near term where the silver lining is coming from.
The silver lining, Christine, is one thing. The worst lining, I guess, is for Germany, right? So how much, and again, what's the base case for any investor right now invested in Germany? How long does it take to go through second round and third round effects?
Well, yeah, that is the big question, Francine, isn't it? If I knew, or if investors knew at this point,
we'd be rich.
Exactly. We would be rich and very relaxed. But alas, that is not the case. And that is a very good question moving forward. It really is going to be all about timing again, right? Because, yeah, it does take a while for these second round, third round effects to feed through. And then at that point, who knows where we will be in terms of monetary policy as well. And, yeah, there are really a lot of factors that are playing into this at the moment. But it seems like at the moment, the investor thinking is the path of least resistance is weaker, whether it's equities, whether it's the euro, whether it's European credit at the moment. We are definitely seeing at the start of this week a sort of sell first and ask questions later sort of mood. And so if there's something that kind of comes in and puts a floor under that, it remains to be seen what is that exactly. But that's sort of the feeling that we need at the moment is something will have to come in to kind of really just kind of put a stop to the weakness that we're seeing starting off the week.
Christine, thank you so much. Christine Aquino there from our markets team, and William de Vilder, Chief Economist at BNP Paribas, stays with us. Coming up, the race to become the next UK Prime Minister nears the finish line. We take a look at the many challenges facing whoever takes up residence in Downing Street. That's coming up next, and this is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by these flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacroix here in London. Now, Britain will have a new Prime Minister tomorrow. Either Foreign Secretary Liz Truss or the former Chancellor Rishi Sunak will be named as the next Conservative Party leader at lunchtime today. Well, we're back with William de Vilder. He's Chief Economist at BNP Paribas. William, first of all, when you look at the UK with all the compounded concerns over inflation, tight labor markets, how worried are you that all the problems in the world, maybe apart from Germany, are compounded on this island?
Yeah, it looks like a combination of how many things can you put on your plate. So to state the obvious, there's just an awful thing that needs to be done. And I think the first thing is that you avoid that the economy will suffer in a longer lasting way of the shocks that it has been experiencing. The thing I'm most concerned about is the distribution consequences. You have a major inflation shock, and it has, of course, a disproportionate impact on the lower income and of the income spectrum. So that you need to work on. The other point is that if energy prices remain high for a long time, which is, I think, a sensible assumption to make, what does it do to companies? What does it do to company profitability? Within the European Union, some factories have already decided to shut down operations, like producing bottles, etc., simply because energy prices, gas prices are too expensive. So let's say that the policy focusing on the avoiding the longer lasting hit is also very important, and of course public finances.
So, William, what does that mean in terms of some of the campaign promises to the Conservative members that Liz Truss has promised? And if you look at the bookmakers, they think she will be the next Prime Minister. How much of those promises can she actually stick to?
Well, you know you have a campaign, and then once you're behind the steering wheel, you may need to adapt your emphasis. That is not unique to the UK. You see that in about every country where there has been a political campaign. The reality is that you have a country which has a massive challenge with respect to inflation. Okay, leave that to the Bank of England, and it will do the necessary. But that is also going to mean, of course, that on top of the supply shock, you also have tight monetary policy, so it makes the demand and activity environment even more difficult. Hence, you need to do something to support, and then accept, I think, that public finances would bear the brunt in the short run. But in the medium run, you will have to do that. You have to do something and rein in the deficits. Otherwise, you end up with a situation that borrowing requirements are structurally higher than in other countries, and that your currency would also be structurally weaker.
William, what does that mean for pound? How much lower can pound be, and how much is that problematic for the Bank of England, if it is?
Well, I think you have a combination of pure British factors with respect to the pound, and then you have the global environment, of course. I think what's important in countries in currencies, that have been weakening significantly is that at some point the rubber band metaphor applies. That is that there's a lot of energy because you have been pulling that rubber band, and then all of a sudden, or not all of a sudden, but at some point, there is some good news. Good news could, for instance, be that when inflation firmly starts to roll over, the good news could be that you see that sentiment indicators start to bottom. I think that is a bit early, but these are the things that you have to look at, because then, of course, you will have big short covering because people will say, I've made enough money there and now it's getting a bit too risky. Same line of thinking, by the way, applies to the euro dollar and to dollar yen, even riskier in my view.
All right, William, thanks so much. William de Vilder, their chief economist at BNP Paribas, with some great insight into the UK. Now, coming up, the French finance minister, Bruno Le Maire, didn't find Nord Stream shutting to be a surprise. More from him next. This is Bloomberg.
Today, the UK Conservative Party decides who will succeed Boris Johnson as Prime Minister. As Rishi Sunak and Liz Truss go head-to-head, keep it tuned to Bloomberg for the latest news and up-to-the-minute results. Bloomberg, your global business authority.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
Politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
It's not a surprise. Nobody should be surprised by this very last decision of the Russian government. We need to be prepared for a total cut of gas supply from Russia. I think it will be a challenge. Let's be very clear. It might take time, but explaining to all the 27 member states that if we want to be consistent with the policy of sanctions, there is a need to cap the oil price seems to me to be the right direction.
Well, the French Finance Minister Bruno Le Maire there speaking to Bloomberg on Europe's looming energy crisis, and that was at the weekend at the Ambrosetti Forum in Italy. Now let's get straight to the Bloomberg. First word news, here's Laura Wright. Hi, Laura.
Hi, Francine. EU ministers are set to discuss special measures to rein in surging energy costs, including gas price caps and a suspension of power derivatives trading. They'll be considered at a meeting of energy ministers on Friday. Russia's failure to reopen the Nord Stream pipeline over the weekend after maintenance is bringing renewed urgency to the debate. Germany, meanwhile, has unveiled a $65 billion package to support consumers. China has extended its lockdown for most of Chengdu's 21 million residents, with all indoor entertainment venues, schools and dine-in restaurants remaining closed. All of the country's 31 mainland provinces recorded at least one local COVID case over the past 10 days, reflecting the broadest outbreak since at least February 2021, when disclosures first started. Voters in Chile have rejected a new constitution that prioritized social rights and the environment, dealing a blow to a 3-year campaign to temper free market policies. With almost all ballots counted, 62% rejected the plans, which opponents argued would hurt growth and development. The US climate envoy, John Kerry, says Russia's president has weaponized fuel by restricting energy supplies to Europe. Speaking exclusively to Bloomberg in Hanoi, the former Secretary of State also told us about the prospects for re-engaging with China in the fight against global warming.
I remain hopeful that they did say they would suspend. That means that it could open at any given time. My hope is that President Xi will recognize the benefit of getting both of us moving in the same direction, leading to Sharm el-Sheikh. The world needs a positive message.
Vistry Group has agreed to buy Countryside Partnerships in a deal that values the embattled UK home builder at around £1.25 billion. The cash and share deal has been recommended by the boards of both companies and comes at a premium of about 9% on Friday's closing price. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thanks so much. Coming up, the race to become the next UK Prime Minister nears the finishing line. We take a look at the many challenges facing whoever takes up residence in Downing Street. If you look at UK markets, the focus firmly actually on energy prices. So maybe as Europe scrambles to respond to a gas surge by 35%, there's a bit of a reprieve when it comes to the FTSE 100, down some 1.2%. The focus, of course, is also on pound. Currencies full steam ahead, the euro sliding, and policymakers now grappling on how to curb demand dramatically. This is Bloomberg.
Inside the boardroom. Let's suppose you win a proxy fight or you just get invited onto the board. You go to your first board meeting and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we presented with the plan.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Welcome to the world of decentralized finance. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
Energy emergency. Europe weighs crisis measures after Russia shuts the Nord Stream pipeline indefinitely. Gas prices surge again. Risk reversal. The euro slumps to a 20-year low and European stocks plunge as the energy crisis compounds inflation fears. Plus, Britain in the balance. Liz Truss looks set to win the Tory leadership race to succeed Boris Johnson and become the UK's next Prime Minister. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francie Lacqua here in London. Now, let's check in on the markets. And, of course, the main story, apart from UK politics, is what we're seeing in energy prices across the board. Europe racing to stave off energy catastrophe this winter that's threatening to turn into an economic and financial crisis, too, because of the proximity, of course, of Germany and the reliance on Nord Stream. You can see the DAX down 3%. European natural gas futures up 30%. Sweden, actually Finland, creating some emergency backstop at the weekend to help utilities struggling with collateral requirements. Now, Britain will also have a new prime minister tomorrow, but we find out who it is today. Either the Foreign Secretary Liz Truss or former Chancellor Rishi Sunak will be named as the next Conservative Party leader at lunchtime today. Well, joining us now from Downing Street is Bloomberg's Lizzie Burden. So, Lizzie, first of all, is it definitely Liz Truss?
Never say definite in British politics, Francine, after all the commotion, the surprises we've had over the past few years, but all the polls would indicate that it's most likely to be Liz Truss, and if it is, she'd be the third female Prime Minister in British history. Either way, it will be the fourth Prime Minister in 6 years in the UK, just showing how tumultuous a time it has been, and they're going to inherit an economic crisis, the likes of which we haven't seen since the early 1970s. You've got inflation in double digits, workers striking across sectors, and the BOE seeing a recession on the way. So it's a very, very forbidding in tray, whoever is the next leader. But let's not write off Rishi Sunak until 12:30. That's when the result comes.
Okay, let's not. You're right, Lizzie. Let's not do that. So let's see how the market takes whoever becomes, of course, the next prime minister. So talk us about the pageantry, and this is what the Brits do so well. What happens after 12:30 today?
Well, tomorrow, both Boris Johnson, outgoing Prime Minister, and whoever is the next leader, as I say, it's likely to be Liz Truss, will head to Balmoral. That's the Queen's Scotland residence. Needs must at this moment. It's not. It is a break with tradition, but given the Queen's mobility issues, they're going to go to her in Scotland and then hand over power. Truss will then come back and make a speech here at Downing Street. Again, a break with tradition. It might actually be from inside that famous black door this time. And then on Wednesday, she would meet with her new cabinet, discuss her plans for how to deal with this cost of living crisis that the UK finds itself in, before heading to Prime Minister's questions in the House of Commons. But really, once she's in, the challenge is going to be staying there, because there's going to be a general election by the latest January 2025, and appealing to the general public's a very, very different beast to the narrow 160,000 or so Tory party members that she's had to try to win the votes of so far.
All right, Lizzie Burden on Liz Truss. We can take a bet, Lizzie, on how many times you're going to be called Liz instead of Lizzie. Talk to me a little bit about, the main challenges. I mean, they're huge challenges. How many promises can Liz Truss actually keep?
Well, we have a report on the terminal today about even some of Truss's closest supporters doubting whether the tax cuts, the increases in defence spending, the subsidies to energy that Liz Truss is said to want to offer can add up. And whether they'll actually be enough, and whether she'll actually have to U-turn very soon into taking the premiership, which would undermine her authority. And it's not just her closest supporters, it's also the markets. You've seen the moves in the pound since Boris Johnson resigned earlier in the summer. It's been a brutal contest since then, and it isn't exactly clear what the fiscal policies will be. But remember, we had Charlie Bean, the former Deputy BOE Governor, on this programme warning about a crisis in gilts and sterling. Even if Truss manages to win over the Tory party membership, he said that it's the markets that will punish bad policies, if indeed they are. And she said that she will focus on tax cuts instead of handouts. She said that she wants to take on the economic orthodoxy at the Treasury and the Bank of England. She blames the BOE for inflation, and she says she wants to review its mandate. That could undermine the credibility of the institution at a moment when it's trying to fight inflation.
Lizzie, thanks so much. Bloomberg's Lizzie Burden there outside Downing Street. Now we're joined by Catherine Garrett-Cox, Chief Executive Officer of GIB Asset Management. Catherine, great to have you on. It's a pretty busy day, because if you look at exactly what's going on in UK politics, let's assume it's Liz Truss, because that's the kind of mood music not only by the bookmakers but the Sunday papers. What kind of policies can she actually put in place?
Well, I mean, I think you just heard from Lizzie there that clearly one of the things facing whoever steps through the door of number 10 is going to be tackling the energy crisis, but most importantly, the rising cost of living. And I mean, I think, as an aside, the other thing that we've got to remember is we've got to hold firm to our green agenda as a UK. So Boris Johnson made great promises around net zero by 2050. There's a whole squeeze on lots of things at the moment. So I guess the sort of key issue for whoever steps into that role will be, what is the short-term pain versus the long-term gain? And we have to believe that we need to get on this pretty quickly.
Is it possible to cut taxes in this environment with, so much? I mean, you need to worry about the budget deficit.
Well, I mean, I think there are worries about the budget deficit. I mean, clearly, we've got rampant inflation. I mean, basically, we've got a toxic cocktail of things that I don't think anyone could have foreseen in the last 6 to 12 months. So we've clearly got to tackle some of these big issues. Is it tax cuts? How does all of this hang together? And we're clearly going to know, hopefully, within the next week.
Yeah, although, I mean, it's difficult to have a comprehensive plan in the next week. Do they need more time? I mean, even with the Bank of England, I don't know whether it undermines their credibility and what it all means for the markets.
Well, I would hope to think that plans have been shaped for some time, but perhaps not externalized. And I think in some ways, the fact that so little of this has really leaked into the market is probably a good thing. But as you say, a week can be a long or a short time in politics, and we're just going to have to wait and see.
What does it mean for markets? So when you look at pound, for example, how much lower does sterling go?
Well, clearly at GIB Asset Management, I mean, what we're really focusing on is sort of markets in general. And from a UK and sterling perspective, I mean, the UK has some challenging headwinds at the moment. Yeah. I'm not sure that we would necessarily forecast, exactly the sort of low point of sterling. But I think, clearly what we've got to see is support for consumers. I mean, consumers are seriously stretched at the moment. We've got a whole range of different, as I said, headwinds coming together, and support for consumers on the ground, I think, is going to be really what the next PM needs to focus on.
So, Catherine, I mean, this could be actually companies going under because they can't pay energy bills. This could be utility companies going under because consumers aren't paying their energy bills.
Well, I mean, there are so many different consequences, right? Around 9 million households are forecast to move into fuel poverty. I mean, that is, pretty extreme. What are the other consequences of what's happening in the macro environment? From a consumer perspective, we've got the fact that people are holding back on saving for the future. So 1 in 10 adults at the moment is either pausing or halting their pension contributions, which is a pretty scary scenario. So what we've got to consider is, okay, what are people doing now, but what will the longer term implications be of that? And then how does the private sector rally around that with everything that the PM is going to put in place to make sure that we can build a more resilient economy, because surely that benefits everybody.
So as the chief executive of that asset manager, do your clients want to stay invested, or do they want to just cut down and get into something else?
Well, at GIB Asset Management, mainly we're focused on very long-term themes and trends. So our whole ethos is around investing in companies that seek to solve the world's greatest challenges. And let's be honest, we've got a few of those at the moment. So what we're seeing from a client perspective is that really there's a very, I would say, a very sanguine buy and hold type of mentality. Most of our investors are prepared to look through the short-term volatility. And as an investor, well, for years, and what I would say is that generally speaking, that ends up being a better outcome for all concerned, because trading furiously brings with it transaction costs that are often just going to eat into your financial returns. So, I mean, when you've got galloping inflation, leaving money sitting in the bank, if you have any in cash, I mean, you're just going to see that eroded.
Right.
So,
but they're not saying, actually, I want to go into private equity or I want to go into something else, you know, such as real estate.
I mean, right now, I mean, in terms of what we're seeing across the board, from our perspective, investing in companies that are helping to solve some of these challenges that we see, whether it's addressing the energy crisis, whether it's increasing productivity, you know, tackling the green agenda, and then we've got a whole series of issues around the health theme, right? And again, if you've got an NHS that's at breaking point in the UK, there are a whole lot of things that, you know, we think the corporate sector can bring to bear on tackling these challenges.
All right, thank you so much, Catherine Garrett-Cox there, the Chief Executive Officer of GIB Asset Management. Now, let's get straight to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Vistry Group has agreed to buy Countryside Partnerships in a deal that values the embattled UK home builder at around £1.25 billion. The cash and share deal has been recommended by the boards of both companies and comes at a premium of about 9% on Friday's closing price. The UK is among the potential sites for Prologium's $8 billion factory that would build a new generation of EV cells. The Taiwanese solid-state battery startup is looking at options across Europe, the US, and Asia. Solid-state batteries promise reduced charging times, longer driving ranges, and unlike conventional lithium-ion batteries, no fire risk. Citigroup has joined rivals in trimming its mortgage workforce as rising interest rates continue to weigh on demand for US housing. A source says the job losses total fewer than 100 positions. The bank originated $7.2 billion in mortgages in the first 6 months of the year, down 15% compared with a year ago. That's the Bloomberg Business Flash. Francine.
Laura, thanks so much. Now, coming up, we have more on Europe's energy crisis as the EU weighs special measures to rein in soaring energy costs. That's next. This is Bloomberg.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
The top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. but I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this is a picture for energy stocks. A lot of the focus, of course, is on energy stocks, given what we saw in the last, 3 days. But it was today at the open of gas prices up some 35%. It's putting a lot of pressure on energy. Not on energy prices, but it's putting a lot of pressure on equity stocks because we worry about the second and third round effects. If you look at the actual utilities, the actual energy prices, Uniper down 10%, RWE down 3.7%, but Equinor gaining. Now, the global fuel shortage should encourage governments to embrace renewables in order to combat climate change. That's at least according to the U.S. climate envoy John Kerry, who also urged Europe to divest from its dependency on Russian energy. Well, he spoke to Bloomberg's Haslinda Amin in Hanoi.
Fuel, gas, oil, has been weaponized by President Putin. Now, in war, obviously people go to extremes because of the stakes.
What is the best stopgap measure, you think? Because we know that the U.S. has suggested exporting fossil fuels to fill that gap in Europe. Is that not a contradiction to what you're pursuing,
No.
which is clean energy?
It's not as long as it is temporary, as long as it is accompanied by a huge uptick at the rate and the amount of renewable energy that is being deployed. You say, what is the shorthand, quick take out of this? It is, be as independent as you can in your own energy grid. Get your renewables out there. Begin to wean yourselves from the weapon that is being used against you, which is the dependency on fossil fuel and gas.
The thing is, as a result, even Germany is investing in gas facilities right now.
Yes, they are, but here's the way we at least look at it. There will be gas and oil pumped for some period of time, no matter what. That's cooked in to the rate at which people are now saying we will reduce our emissions. Net zero by 2050. You can do that by using gas to some degree if it replaces coal or replaces oil. Why? Because gas is 50% less polluting. So for a period of time, if you're using gas in place of coal, that's a gain. That's a reduction in emissions. But after you reach 2030 or somewhere in that vicinity, in order to get to net zero by 2050, you must be reducing the emissions from the gas.
U.S. climate envoy speaking there with Bloomberg's Haslinda Amin in Hanoi. Now, the global fuel shortage also having a pronounced effect in Europe. Hours after G7 leaders agreed to implement a price cap on Russian oil, Gazprom reversed plans to resume gas flows through a Nord Stream pipeline. Now, a string of European politicians spoke with Bloomberg TV at the Ambrosetti Forum in Cernobbio, Italy this weekend about the ongoing crisis, and here's what they had to say.
I think it will be a challenge. Let's be very clear. It might take time. But explaining to all the 27 member states that if we want to be consistent with the policy of sanctions, there is a need to cap the oil price, seems to me to be the right direction.
We are convinced that next year, if these initiatives will be effective gradually, the level of inflation could be reduced. I'm not saying it's going back to what it was 2 years ago, of course, but it will reach a peak and begin to decline possibly next year.
It's a great accomplishment. It's a good step. But now we need steps from the European Union. September the 9th will be a turning point, and the European Union has to react to the Putin's challenge, as we did 2 years ago on pandemic. And I think we succeeded 2 years ago. We have to succeed today too.
EU energy ministers are preparing for an emergency meeting on Friday where a number of special measures to rein in soaring prices will be discussed. Now, for more on all of this, we're joined by our Will Kennedy, our senior executive editor for energy and commodities. Well, we wake up, this morning, and it's kind of, it's a nightmare, really. It's worst case scenario. Have we planned for it? So can we cushion the blow in Europe?
Well, I think that it's a clear escalation of the crisis. Yeah. It makes things more severe, and you can see that in the market reaction. As late as Friday, people had expected limited flows to resume through Nord Stream, and clearly at the last minute they didn't. And I think it's going to make the winter tougher. We won't be able to fill gas storage as quickly as we'd hoped, and gas prices are higher. So yes, there's a clear escalation in this energy struggle we're seeing between Russia and the West, which involves both this action on Nord Stream and the oil price cap that was being discussed there.
Well, this is a picture that Gazprom released of the alleged oil leak. It kind of makes you cry, but also laugh, because it's just a little bit ridiculous. Do we just assume, and I think we're going to get the picture out in just a couple of seconds, do we just assume that this doesn't go back online, right?
I think so.
What is that even?
There seems to be a bit of oil just leaking out of a group of
What's
wires.
my energy counter? Like, they've taken
this. It's almost like Gazprom's trolling the world with that photo, to be honest with you. And more importantly, Siemens, the company that services these turbines that drive gas through the pipeline, said this is no reason to turn it off. So we can assume that this is gamesmanship, this is a political motive, and as this escalating energy battle happens, I don't think there's any reason to expect Russia to turn this pipeline back on. I think that Europe's going to have to live without it. And attention will now turn to the final route in which Russia gas is getting into Europe, which is through Ukraine. And I think people will start to worry about whether that's going to be under threat.
Yeah, and our Valerie Teitel also put this, wonderful chart together looking at gas flows, which is, very telling. And I guess it's, for utility companies, is this a good or a bad thing?
Well, it depends. Depends if you've got any gas. For people who are short of gas, who have agreements to sell gas to their customers, this is a very bad thing. And I think there's a lot of nervousness in financial markets about what the impact might be here. We saw Nordic countries inject huge amounts of liquidity into their power market over their weekend, because I think there is a real concern about what the financial ramifications of some of what we're seeing in markets may be, and that Europe's trying to get ready for potential outcomes.
Well, so do we assume that actually a lot of these utility companies will have to be bailed out, across Europe and also in the UK, because it's either customers, because of inflation, not being able to pay for the bills, or it's actually some of these companies not having, the gas to supply?
When this all plays out, one thing I think we know for certain is that governments are going to be much, much, much more involved in Europe's energy markets. So much poorer. Yeah, a lot of it will come onto state balance sheets, clearly. I think we're probably likely to say that in the UK from the new Prime Minister today, is that they will cap prices somehow and then take some of the costs onto their balance sheet. But what's being discussed in Europe, we had this story over the weekend that they're going to discuss radical interventions in energy markets, perhaps suspending some derivatives markets, perhaps capping some prices in markets when they meet on Friday. We're going to have a much more state-controlled energy market in Europe. And yes, that will have an expense for taxpayers, but it may take some of the sting out of the problem immediately for businesses and consumers in the region. That's the hope.
All right. Well, thank you so much. Will Kennedy there, our senior executive editor for energy and commodities. Now, coming up, China's zero-COVID policy continues to hamper growth, with lockdowns extended over 21 million people in the Chengdu province. We'll have more on that shortly. And this is Bloomberg.
Today, the UK Conservative Party decides who will succeed Boris Johnson as Prime Minister. As Rishi Sunak and Liz Truss go head-to-head, keep it tuned to Bloomberg for the latest news and up-to-the-minute results. Bloomberg, your global business authority.
you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Watch Bloomberg Surveillance Early Edition for the news you need when you need it.
I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London.
I'm going to be watching retail earnings from both Home Depot and Walmart.
Then surveillance for in-depth analysis.
Alongside Tom Keane and Lisa Abrambitz, I'm Jonathan Ferro.
Across the board, these are good numbers.
The big headline there is reaffirming the outlook.
How much does this give faith that you can get some sort of resurgence in consumer spending?
Bloomberg Surveillance. Be informed. Be prepared. Be ahead of the game. Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. The results of the contest to succeed Boris Johnson as Prime Minister will be announced today, with the winner taking over after a meeting with the Queen tomorrow. Foreign Secretary Liz Truss is the odds-on favourite to win and will come into office facing a brutal economic storm. China has extended its lockdowns for most of Chengdu's 21 million residents, with all indoor entertainment venues, schools and dine-in restaurants remaining closed. All of the country's 31 mainland provinces recorded at least one local COVID case over the past 10 days, reflecting the broadest outbreak since at least February 2021, when disclosures first started. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thank you so much. European stocks slumping, the euro falling today. It's all about energy, the energy crisis with Russia intensifying. Of course, this worsening energy crisis is adding to risks for a global economy already facing high inflation, but also a wave of monetary tightening. We'll have plenty more on the markets and on UK politics. This is Bloomberg.
Apple has identified its next big business, bringing advertisements to more parts of your iPhone. Today, Apple pushes ads in 3 places: the App Store, Apple News, and the Stocks app. In the News and Stocks apps, Apple shows display advertisements. That means that third-party companies like car dealerships or mortgage lenders can showcase their advertisements just like they can on a website. On the App Store, the situation is different. There, Apple has search ads. This allows developers to buy their way into showing up higher on search results. For instance, an App Store developer can bid for the term car racing or basketball so their apps would surface above competing apps in the list of results. Apple's push into ads is a little ironic, given that its ATT, or App Tracking Transparency Privacy feature, limits the ability for Meta, Snap, and even smaller developers to generate as much revenue as possible from advertising. That's because the feature allows users to choose if they want their data collected and tracked across third-party apps and websites. Still, Apple's hoping to expand its own ads business and is planning to add search ads to its Maps app. Other areas where ads could eventually appear are in Apple Books and Apple Podcasts, along, maybe one day, with an ad-supported tier of Apple TV Plus to compete with new offerings from Netflix and other streaming video providers. I'm Mark Gurman. This is Power On.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco. From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
Welcome to Bloomberg Markets. I'm Anna Edwards, actually, in this hour on this special edition of Bloomberg Markets because, of course, we have no trading over in the United States today. Plenty of trading going on here in Europe and lots to talk about here in Europe. Let's have a look at what we see on the equity market picture right now, or what we see on the broader asset picture right now. This is where we are on a host of assets that are really crucial to today's trading. Remember, we're without the US, but we have plenty to talk about here in Europe. The UK political story, the European gas story. So here's European gas prices. This is the European benchmark, up by a 30% jump today, 279 euros per megawatt hour. It's not 340, that's the high we touched earlier on this year during the height of the crisis earlier on this summer, but it is still a very elevated level, and it follows a big retreat in those gas prices last week. That was driven by better news around stockpiles and better news on Friday around the possibility of the Nord Stream pipeline opening up. That didn't happen. We heard from Gazprom after hours on Friday that they were not going to open up the Nord Stream pipeline, and so as a result, 279 is where we trade on the gas price. It is that story that is permeating many other assets today. The DAX then down by 2.5%. It's in pretty good company. The CAC 40 in Paris down by 1.8%. The London market down 0.8%, a little more resilient because of its bias towards energy. The euro also taking a hit on the same news story. We did have a 0.98 handle on the euro earlier. Now it's at 0.99, down by 0.4%. The UK two-year yield I put in here, it's focused on the gas story. We've seen a big jump in the UK gas price as well. It's not just the Eurozone story, that. So we do see that yield responding to the same thing, but also adding in their political uncertainty, and we've got plenty to talk about when it comes to UK politics. Let's linger on that theme. The UK's next Prime Minister is set to be announced today at 12:30 London time. It has been, over the last couple of months, a face-off between the Foreign Secretary Liz Truss and the former Chancellor of the Exchequer, Rishi Sunak. For more, let's get an update. Bloomberg's Lizzie Burden joins us now. Lizzie, walk us through the timeline. What are we likely to hear today?
Well, Anna, in less than 2.5 hours, the fourth occupant of number 10 Downing Street in 6 years is going to be announced. It's likely to be the third female leader in Britain, in British history, Liz Truss. She's widely expected to win this contest, and she inherits an economic crisis that has no comparison except since the early 1970s. You've got double-digit inflation, a recession on the way, workers striking across the economy, and the pound in August had its worst month since the Brexit referendum. So the first order of business will be to go to Balmoral, the Queen's Scottish residence, where Boris Johnson will also fly to separately. She'll see the Queen. It's a break with tradition, but needs must given the Queen's mobility issues. And then she'll return to Downing Street to make a speech expected to focus on the urgency of the cost of living crisis. Then on Wednesday, she'll meet with her new cabinet to discuss how to deal with it, and then she'll face Prime Minister's questions. But really, once she's in, the challenge is going to be staying there, because we're expecting another general election by the very latest January 2025, and to appeal to the general public is going to be a very, very different task to winning over this Conservative Party membership that it's taken, she hopes, to get her into number 10.
Yes, Lizzie, now here in the UK, of course, the last 6 weeks have been spent passing the difference between Rishi Sunak and Liz Truss. But for the international audience, remind us of what it's likely to look like, a Liz Truss Prime Ministership, if that is what we get. We wait to hear today whether she has indeed won, as many expect.
Indeed, and there are always surprises in British politics, so let's not write him off until 12:30 London time. But Truss throughout the campaign has expressed her preference for tax cuts over what she calls handouts. She said that she wants to take on the economic orthodoxy of the Treasury and the Bank of England, what she calls the blob. She blames the BOE for the inflation crisis, and she says she wants to review its mandate, although yesterday she said that she was a firm believer in its independence. Now, we've had lots of commentators on Bloomberg TV warning about a crisis in gilts and sterling, including the former BOE Governor Charlie Bean. Even if Truss has won over the Tory party membership, as he puts it, the markets will just punish bad policies.
Lizzie, thanks very much. Bloomberg's Lizzie Burden with a look at the timing of what's to follow and indeed what we can expect from Prime Minister Liz Truss, if that is indeed what we see confirmed later on today. Joining us now with analysis, Simon Fraser, Sir Simon Fraser, who joins us now, managing partner at Flint Global, of course, used to be at the Foreign and Commonwealth Office, and a pleasure to have him here in studio. Very good to see you, Sir Simon. Nice to speak to you. So the first order of business for whoever is Prime Minister, but the polling has suggested it would be Liz Truss. The first order of business would be to do something about the cost of living crisis. What would you expect to hear come Tuesday?
Well, I think you're right. We probably do have to talk about Liz Truss, though it's not a done deal yet. I mean, obviously, she has to come in, and as Lizzie has made some very good points there about the challenges that face her, but obviously the big challenge is, in a time of inflation, particularly what to do about energy prices. And I think that whilst she is a supporter of the small state, and she started off the campaign very cautious about supporting households and businesses, she's been converted now, and I think that we are going to see a significant package of short-term support. The precise form of it, we don't know, but I think it's coming.
So the Europeans, in the form of the EU, are talking about a cap on gas prices. That clearly leaves somebody to pick up the difference, the governments or the taxpayer. Do you think the UK would go down a similar route, or is this going to be just all about cushioning the blow in some other way?
I think it looks as if they're going down that route of not introducing the next rise in the price cap, but capping prices for households and for small businesses. Now, how they do that, whether they do it through support for households or whether they cap it and support energy suppliers, is not clear. I think the latter is increasingly the favoured route.
Okay, we spend a lot of time looking at what markets are pricing in and the market response, and we've been talking for a few weeks now about how gilt yields have been rising. Yes, yields have been rising globally, but there's been more of an emphasis on that phenomenon here in the UK, and some are suggesting it's about political uncertainty, maybe nervousness around fiscal spending and borrowing. Is that something that in the conversations in Whitehall will be very much heard, do you think?
Well, of course, it will, and it's a concern, and we've heard those concerns from the Treasury and from the Bank of England. The fact is inflation is high, borrowing for the UK is becoming more expensive because there is a question. This prolonged leadership contest over the summer hasn't actually helped the markets understand what's going on. So there's a confidence question there. And the big issue for Liz Truss is this. Is she going to be able to strike the right balance between her conviction, which is a small state, low tax, deregulated economy, and the obvious fact that actually in the short term we're going to need massive state intervention in the economy. So how does she get the credibility of that right? That is the balance she's got to strike.
Okay, so we'll look for more detail there. In terms of her popularity with the people, I mean, a YouGov poll out over the weekend said only 12% expect her to be a good or great leader. 52% think she'll be poor or terrible. Now, granted, we don't know much about what she'd be like as a leader yet because she hasn't started. She hasn't even got the job yet. But what can she do about that? I mean, I suppose it's as we saw with Rishi Sunak, it is easy to be relatively popular when you're giving away money.
Yes, well, I mean, obviously there's also a little bit of jaundice about British Prime Ministers. We've had a few who've gone through recently.
They've gone quickly.
So they have gone quickly. I think the thing about Liz Truss is this. She is actually quite an experienced minister. She has been in government for more or less a decade, so she shouldn't be written off as a novice in any way at all. And I think that people tend probably to underestimate her political skills, and she does also have quite good interpersonal skills. So she's got, quite a few talents and assets. I think one really important thing is what sort of government is she going to build? Is she going to go for a cabinet that's of the right, that sort of, responds to the issues that concern Conservative Party members, strongly pro-Brexit, etc.? Or is she going to try and have a broader cabinet because she's got to unite not only her party but her country with an election not far down the line?
Okay, we'll see. Yeah, you say not far down the line, so you don't think she'd be tempted to call an
Well, I mean, it's got to be at least two. I think it's called an early election now would be very risky because we're going into very difficult times. I think a much better thing, if she can, is to get some credible policies in place and be able credibly then to say things are getting better before she goes to the country.
She's fostered comparisons with Thatcher. She's liked that. I mean, she's been pictured in tanks, similar to Margaret Thatcher. She wears clothing similar to Margaret Thatcher on occasion. Do those comparisons stand up, Simon?
Well, I mean, Margaret Thatcher is a unique figure in British political history, so I think we shouldn't push the comparison too far. I think one thing that is true, though, is she is, I think, a conviction politician, like Margaret Thatcher. Now, Margaret Thatcher actually was very cautious in some of her policies. For example, I don't think she would have done a lot of borrowing, such as Liz Truss is promising at the time when we've got such high inflation. But nevertheless, there are similarities, and the British people quite like that sense of positive, can-do spirit that, both Truss and Thatcher brought to the job.
Yeah. You obviously spent a lot of time thinking about the economy, but also global policy, foreign policy. Simon, she is clearly tested in that regard because she's been Foreign Secretary for a while. So is she kind of a continuity candidate when it comes to that?
I think the British foreign policy will be pretty continuous under her. I mean, she will continue, of course, I think, the position on Ukraine. She will want actually to make sure that Putin takes the blame for the problems domestically in this country, not the British government. So she'll be tough on Russia. I think that she will be tough in her negotiations with the EU because she is very dependent on support from the pro-Brexit wing of her own party. So that's a challenge for her. She will be pro-American, I think. And one of the things that she's talked about in the campaign is a toughening of the position against China. That is something we've really got to look at. That is a very difficult balance, again, to be struck between meeting the security considerations, but also keeping a sensible economic relationship open with what is, after all, the world's biggest or second biggest economy.
Yeah, she's been quite a China hawk.
Yeah.
What went wrong, thinking about the sort of big picture here, Simon, what do you think went wrong for Rishi Sunak, if that is what is confirmed later? We don't write things off, but we are expecting to hear that Liz Truss has become Prime Minister. So what do you think went wrong?
Well, I think for Rishi Sunak, first of all, he carried a lot of responsibility of decisions that were made by the previous government, including the rise of national insurance contributions. I think also within the party, they had this sort of seller's remorse about Boris Johnson. They wanted to get rid of him. Once they got rid of him, they regretted it. And he was seen as one of the people who was instrumental in that. So I think he found it difficult to turn that round. And frankly, I don't think he struck quite as good a chord with the party as she has during the campaign. She started slowly, but she's come through quite strong, and I think she got the interaction with the party better.
And she was somebody who stood by Boris Johnson, and that hasn't held her back, certainly with this constituency.
Yeah, that is right, absolutely. But of course, the other thing you have to remember is that he was more popular amongst Conservative MPs. So one of the things that she's got to do is assert her authority in Parliament, not only in Parliament as a whole, but within her own party. She's going to have, on paper, a very big majority, but I don't think it's going to feel quite like that. She doesn't have... she hasn't been elected as Johnson was himself to win that majority.
Yeah, with that huge mandate from the public. So, Simon, thank you very much for joining us. Simon Fraser, joining us there, managing partner at Flint Global, of course, and formerly with the Foreign and Commonwealth Office in the UK. Coming up on the programme, we'll keep you up to date with plenty of the news coming through from around the world. Let's get an update now on that. A First Word News update with Laura Wright. Good morning, Laura.
Good morning, Anna. The results of the contest to succeed Boris Johnson as Prime Minister will be announced today, with the winner taking over after a meeting with the Queen tomorrow. Foreign Secretary Liz Truss is the odds-on favourite to win and will come into office facing a brutal economic storm. President Biden's top climate envoy says he's hopeful that climate talks with China will resume after discussions stalled following House Speaker Nancy Pelosi's visit to Taiwan last month. Speaking exclusively to Bloomberg in Hanoi, John Kerry said the US and China must restart talks because, quote, that will shape the response of other countries around the planet.
We've got to treat this like a war. I mean, literally mobilizing every facet of our economy to deal with it.
China suspended climate change talks with the US on August the 5th as part of a series of what it called countermeasures to show its displeasure with Pelosi's visit to Taiwan. China has extended its lockdown for most of Chengdu's 21 million residents, with all indoor entertainment venues, schools and dine-in restaurants remaining closed. All of the country's 31 mainland provinces recorded at least one local COVID case over the past 10 days, reflecting the broadest outbreak since at least February 2021, when disclosures started. Voters in Chile have rejected a new constitution that prioritized social rights and the environment, dealing a blow to a 3-year campaign to temper free market policies. With almost all ballots counted, 62% rejected the plans, which opponents argued would hurt growth and development. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg. Anna.
Thanks very much for that, Laura. Now, coming up on the programme, we've got more on Europe's energy crisis as the EU weighs special measures to rein in soaring energy costs. We'll look ahead to that meeting set to take place on Friday. What can European leaders do? This is Bloomberg.
The public seems to have lost interest in waiting around for self-driving cars. I rode in Google's self-driving car in 2011.
Wow.
And I'm still waiting to be able to buy or just ride a self-driving car on demand. Why is it taking so long?
I think in self-driving, first of all, the opportunity is so clear. The reach is so broad. We forgot that big things do start small. We all know how to drive, but we're driving amongst humans, and you have to deal with so many little scenarios. There are so many things that you've been learning about driving since birth, and codifying that using AI, sensors, and computers is turning out to be a lot harder. Last but not least, it's a safety critical system. None of us should deploy until and unless we have closed loop evidence that we're safe.
When U.S. jobs numbers are released,
numbers are pretty much in line with what Wall Street expected.
Bloomberg brings you crucial data at terminal speed.
315,000 jobs created, an optimistic number for the Federal Reserve.
And instant expert analysis.
Dare I say that this might be called a Goldilocks jobs report?
What this does is really push away a lot of the arch gloom.
Maybe leading us toward a soft landing.
The Fed is still going to be debating 50 or 75 basis points.
Nobody covers jobs day like Bloomberg, your global business authority.
Welcome back to Bloomberg Markets. I'm Anna Edwards. Let's get a further update on what's going on in the European gas crisis. European gas prices have been rising today, hours after G7 leaders agreed to implement a price cap on Russian oil. Gazprom reversed plans to resume gas flows through the Nord Stream pipeline. EU energy ministers are preparing for an emergency meeting on Friday, where a number of special measures to rein in soaring prices will be discussed. For more, we're joined by Stephen Stapczynski, Bloomberg energy reporter. Stephen, good to speak to you once again. I see a line coming through from the Kremlin in Russia saying that the Nord Stream gas hold, in their view, has caused only by European sanctions. Of course, European leaders will probably look at this as retaliation for the cap on prices that Europe is putting in place on Russian oil. Remind us where we've got to then on the supply, on the amount of supply coming through from Russia at the moment. It's coming through to some parts of Europe, actually, to Hungary, for example, but not through the Nord Stream pipeline.
Correct. Yeah, there's a little bit coming through to Hungary. There's a little bit coming through the Ukraine pipeline, funny enough. But there is nothing flowing through Nord Stream. And Nord Stream is important because it's the biggest and it's key for supply to Germany. And right now, it's zero. And it's likely to stay at zero through this winter, which is why you're seeing the reaction. TTF, or European gas prices, are up 25% today. And there's a threat that it could continue rising. Now, there is an effort across most of Europe to refill their inventories. Germany is about 83% full, France even more. But analysts have warned that even if you do get to 95%, which is their goal for November, without the Russian flow, the Nord Stream offline, that still isn't enough gas to get through the winter, which means that demand destruction or curbing supply to industries will be a necessary move that the governments will have to consider.
We heard over the weekend from the Swedish and Finnish authorities saying they're putting in place a backstop for utilities, a liquidity backstop for utilities, to try to prevent what's been called a Lehman moment. We also heard in months gone by the Germans talking about this situation as potentially turning into something like that. Stephen, describe how this could go wrong in terms of liquidity around the utilities sector.
Well, you know, it's just expensive to have to procure all of this fuel. They have to refill their inventories. And on top of that, they have to tie up a lot of their capital and margin calls. They're also on the wrong side of a lot of different bets in terms of hedging. It is a difficult situation to maneuver. And you have utilities like Uniper that, you know, they're burning through hundreds of millions of dollars every day, billions, and they need more money from the government to stay afloat. So you can see the situation for the utilities is quite dire, but also for industries, you depend on natural gas. That's where you're seeing some fertilizer facilities in Poland and other countries shutting down. Companies are just closing because they can't afford to stay online. And at the same time, it's also hurting, you know, households. Power bills are rising, and that's going to affect consumer spending on that end as well. Across the board, it is having a wide-reaching impact.
Okay, so we know that Sweden and Finland are putting in place liquidity measures. We know that Germany has announced a large package of measures, many tens of billions of euros of measures over the weekend, including windfall taxes. We're building towards a big pan-European, or pan-EU at least, meeting on Friday. What are we expecting to come out of that?
You know, unclear whether we'll actually come to a conclusion on Friday. What we do know is they're going to discuss a number of different measures that will try to cramp down on prices. One is putting a price cap on natural gas for use for electricity. That would try to help, keep electricity prices at a certain level and stop, these giant surges and spikes in the futures market. At the same time, they're also considering potentially measures to stop derivatives trading for electricity, which would be a huge shock to the entire system. They're looking at different ways to peg electricity prices, maybe not peg it to natural gas. They're also looking at ways to reform how natural gas is priced in Europe. They're looking at everything. But will they be able to come to a conclusion? It's unclear.
Stephen, thank you very much. Stephen Stapczynski, our energy reporter, with the latest on what is a big jump in gas prices this morning here in Europe. Still ahead, though, companies are so far staying on the credit sidelines as a lower euro and the rising risks from an energy crisis weigh on sentiment. September, clearly a big month for credit markets. What does this month have in store, given all the headwinds to the global economy? We'll talk about that next. This is Bloomberg.
satellites have propulsion systems. They can kind of move to get out of the way of each other or change their orbit a little bit. It's a service that you guys offer to help these companies know how to maneuver their machines.
Yeah, we offer a collision avoidance service. It's a subscription service. We'll send you an alert up to 7 days in advance if your satellite's going to come dangerously close to a piece of debris or another satellite.
Companies have been doing that for decades, moving satellites around, but it's sort of like a harder problem now.
The risk of a collision is a lot higher now, just because we've installed so much more hardware into space. You have a big collision, it creates a cloud of debris, and now all the other satellites are flying through this whizzing mess of debris. As we add all of the new satellites into space, the risks of the collision, the likelihood of the collision is going up.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to Bloomberg Markets. I'm Anna Edwards. Now, a lower euro and the rising risks from an energy crisis have companies staying shy about raising more credit. Joining us now is Bloomberg's Priscilla Azevedo-Rocha, who is here with me on set here in London. Priscilla, nice to speak to you. So companies are nervous, are they, with the jumping yields that we've seen already and the gas crisis that we have at hand?
That's absolutely right, Anna. Companies are very nervous. So coming into this week, we were expecting a bumper week for supply for bond sales. Companies, they were expected to come to the market on Monday, Tuesday, Wednesday, ahead of the ECB on Thursday. And so far, supply has been very muted. And that's because everyone is uncertain. Okay. Everything is moving across the board, and measures of credit risk are going up, which only means that there's uncertainty in the air and companies are opting to stay in the sidelines.
UBS was saying last week that they thought that spreads should be wider. They were talking about the US, but others have said it about Europe as well. Is there a sense that those spreads will widen further?
The expectations is that spreads are going to widen further, but no one was expecting this. The correction that we've seen today happened this fast in such an intensity. For example, we had very good in the broader scheme of things, months for credit markets during summer. And now what we're seeing today, the widening credit spreads are kind of erasing the recovery done throughout the market.
Okay, Priscilla, thanks very much for the update. Bloomberg's Priscilla Azevedo-Rocha on the corporate debt markets. Coming up, we'll talk to Jeffrey Yu of BNY Mellon. We'll get his perspective on the gas crisis facing Europe, also on UK political uncertainty. More with Jeffrey next. This is Bloomberg.
Fascinating entrepreneurs, because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably can spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, of the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
Daybreak with Lee. On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to this special edition of Bloomberg Markets. It's a US public holiday, of course, but European markets are open and trading. I'm Anna Edwards. Good to see you here with us today. 10:30, just coming up to 10:30 here in London. Joining us now with analysis of where we are on European markets, Jeff Yu, Senior EMEA Market Strategist at BNY Mellon. Jeff, very nice to have you with us. Let me talk to you about what's going on with the energy crisis in Europe. And starting with Germany, we saw some German services PMI data earlier on today, below 50, so in contraction territory it would now seem for that economy, just underlining the weakness with which we are already inflicted on some European economies, and now we add in the gas. Do you see anything that changes the outlook for the European economy in the short term?
Well, in the short term, firstly, we have to take a view on the war, of course, and if the view on that doesn't change, then we just go by the European Central Bank's assumptions, right? I expect them to move their downside forecast issued in June to their core forecast, which is alas, a 1.7% contraction next year. So that's already been seen. The PMI numbers, the forward-looking numbers, expectations are weak. So alas, we have to get ready for more of this.
Do you think that a policy which caps gas prices or something similar, Jeff, if we hear that at the end of the week, can that put a stop to the trends we've seen of stocks weaker, euro weaker, yields higher?
So I don't think it turns the euro around, but perhaps can start to help apply the brakes a bit. Of course, it really depends on what the distribution of this is. If I look at Germany, for example, you're moving from about 3.5% of household disposable income in terms of energy all the way up to 10 or perhaps even higher. If you can cap it, say, between 3 to 5 kind of a range, then it is manageable. Then the onus is on the ECB. Are they going to step up with tightening? If they're going to do 75, then the two things put together, fiscal fiscal easing plus sufficient rate support, that could just help the euro. But these levels and valuations, and my main concern is Europe's running a current account deficit, will run a current account deficit at this rate. So the usual valuation arguments, the natural buyers of euros, that won't apply. So we're in for a tough spot.
Yeah, we can see why fiscal authorities want to ease policy, and we can see why monetary policy makers want to tighten policy. What does it mean to have those two moving in opposite directions, Jeff?
So it does mean in terms of what degrees and under the circumstances that they are happening. So let's be clear, fiscal policy right now, it's just moving as much as possible, or rather expanding fiscal policy as much as possible just for the economy to stand still. This isn't stimulus, this is really preventing the economy from falling off a cliff. So that's very different compared to, say, what happened in 2017 in the US, where you actually try to accelerate the economy. So that's why I go back to your earlier question about the euro. Does it help arrest the slide? Yes, I think it will contribute to that, but it's certainly not going to turn things around because fundamentals are very different right now.
fundamentals are different. Are we concerned about European unity? I suppose in the context of the euro, I'm thinking about Eurozone unity here. The German foreign minister warning that this is going to be a big test of European unity.
So that word solidarity, you are going to hear much more often over the coming weeks or so. I'm actually less pessimistic on that. We saw during the pandemic, where unity did come through with the support package. Yes, it did take a bit of a last-minute compromise, but they managed to get there in the end. I think these repeat crises, when it comes to financial resources, they will come through, and it's become easier, compared to 10 years ago during the bailouts, for example. On the foreign policy side, with respect to Ukraine, I think that's where the test will come through, as we heard from Salvini over the weekend, calling for an easing of sanctions. I think that's where more political noise and political capital will happen.
Yes, and there was some polling suggested that Italians are decreasingly in favour of sanctions on Russia because of the impact it's having with them domestically. Is that something? Is that something that we need to watch? A dynamic we need to watch across Europe?
We absolutely need to watch because different companies here have different energy exposures, and if you look at Hungary, for example, Hungary actually is less affected by the energy crisis per se right now due to its long-term gas contract with Russia. So the IMF did a study on this, which country would within Europe would face a higher burden on the household. So in that context, how do you assuage their concerns? You have Italy making noises already. But other countries in Eastern Europe, they do want to stay the course, and there's greater political will there. UK has its own policies as well. It's not part of the EU process, but under the new Prime Minister, I expect will want to stay the course with sanctions as well. So it's going to be difficult getting a compromise.
Jeff, do you see opportunities in the energy space within Europe at this point?
I guess it depends on how you ask the question there. If we go back to the pandemic, there are absolutely opportunities in energies where bailouts for the sector came with strings attached. You accelerate renewables, you accelerate the path towards net zero, and in return, governments will provide support for you. I think this time around, from the suppliers, from also the utility companies at large, there will be greater support for that. This kind of a green transmission. But I think right now it's less about green, it's about energy independence, it's about becoming less beholden to one or two single players in the market. So that's where the investment will be targeted, but it's about the household first. I think that's the pressing issue.
Let me pivot to the UK, because there's a lot of uncertainty hanging over the UK political scene, of course. What's at stake for you today, Jeff? I mean, whoever wins, and it does look as if Liz Truss is expected by many to win leadership of the Tory party and be the UK's next Prime Minister. What is at stake for you, though, when you look at this from a market perspective?
Right, so I want literally within 5 minutes of her becoming Prime Minister to spell out what are the plans, right? And what will the breakdowns of support will be. We've seen lots of big numbers of late, 50 billion, 60 billion, 100 billion pounds. That will have a fiscal impact, but the UK's fiscal condition is a bit mixed right now. We're paying more in terms of interest payments, due to RPI going higher, but at the same time, with a near 15-year maturity profile, I think the UK can handle, let's say, a large increase in expenditure. I want to see, more go to the household, to lower income households. It needs to be better redistributed. The UK scores poorly along those lines. It is getting through this winter, with as limited disruption as possible. But going back to your point about the opportunities in Europe in energy, there needs to be a long-term plan for energy infrastructure, for energy independence as well, and that needs to be in place. There's the short-term and the long-term, all of which requires a lot of investment.
Yeah, how do you think gilt markets are watching this then, Jeff? Because some people suggest there's a sort of risk premium in here around UK politics at this point. Do you think that, on the one hand, gilt markets might want to see support for the economy, but on the other, they might be nervous about borrowing levels going forward? What are you watching for?
So it's less about borrowing levels, to be frank. As I mentioned earlier, the debt profile is manageable, so more smaller ownership of gilts by overseas investors, so you don't have that discretionary selling. You have a near 15-year maturity profile, so the term structure is favourable as well. There will be more worries about in the short term. What fiscal injection does is it could actually accelerate inflation. Yes, the BOE will try to deal with it, but also means in the short term you pay more more in interest expenses in terms of linkers. Of course, the tax intake will go up on a nominal basis with higher inflation, and we're seeing wage settlements go up as well. Income tax is one of the most important component for revenue, but it's these dynamics, that will cause a bit of disruption. Plus, the BOE will be selling gilts as well. So it's more about the short term and also volatility. That's going to be into the market, but I don't worry too much about the medium to longer term UK fiscal profile. It's not Italy.
Okay, not Italy. That's good to hear from a market viewpoint. What about the pound? I spoke to one guest earlier on who said parity is not out of the realms of possibility. We're at 115 now, Jeff.
So I would push back against parity, and to be frank, right now UK holdings, UK positioning is already quite weak. And we look at our iFlow custody database, $47 trillion worth of assets, and we find that we're already at the shortest, or rather the most underheld in sterling over the last 2 to 3 months or so, especially driven by overseas investors. So basically, in a nutshell, overseas investors who basically drive sterling, they don't have any more to sell. And here's where valuations start to come in. UK doesn't have to worry about its balance of payments turning. It was never good in the first place. So if you look at UK assets, especially equities, and also other direct payments, we always talk about real estate, and also the UK government will want to attract a lot of international investment as well. I think all of that will play to strengths. Again, it's a question of stabilizing sterling rather than driving sterling higher. But a lot will depend on where the BOE is, and also where the fiscal trajectory is. Both things need to be credible, and that's what we're watching over the next 24 to 48 hours or so.
Jeff, thanks very much. Thanks for your thoughts this morning. Jeff Yu of BNY Mellon. Let's keep you up to date with all the news from around the world. Let's get a first word news update. For that, we go to Laura.
Thanks, Anna. Ukraine's Prime Minister is in Brussels today for the EU-Ukrainian Association Council. He's expected to bring up the topic of financial aid as well as the country's membership in the European Union. Meanwhile, President Volodymyr Zelensky met with his top military commanders over the weekend to discuss the situation on the front line. Ukrainian forces are trying to advance in the Kherson region, which Russia occupied shortly after the start of their invasion. The results of the contest to succeed Boris Johnson as Prime Minister will be announced today, with the winner taking over after a meeting with the Queen tomorrow. Foreign Secretary Liz Truss is the odds-on favourite to win and will come into office facing a brutal economic storm. Meanwhile, in Germany, the government expects to receive a large revenue boost by tapping windfall profits generated by energy companies if they keep benefiting from disruptions in Europe's electricity market. Chancellor Olaf Scholz spoke in a press conference following the unveiling of a new $65 billion relief plan to tame the cost of living crisis.
And we will make sure that no such excessive profits can continue to be used by skimming them off in a way, as in the case with the EEG levy, only in reverse. And we will use the many billions that we raise in the process to relieve the burden on citizens with an electricity price break that helps ensure that citizens can also use a basic supply of electricity at cheaper prices.
Bed Bath & Beyond is confirming its CFO fell to his death from a skyscraper in Manhattan on Friday. New York City police have reportedly ruled 52-year-old Gustavo Arnal's death a suicide. Last week, the company said it would slash jobs and close about 150 stores. Arnal was also named in a securities fraud suit filed last month in federal court, which accused several parties of artificially inflating the company's shares. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg. Anna.
Laura, thanks very much. Coming up on this programme, a Bloomberg exclusive. We will talk climate with John Kerry. That conversation next with the US Special Presidential Envoy for Climate. This is Bloomberg.
they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays.
Welcome back to Bloomberg Markets, a special edition of the program, of course, because of the US public holiday. I'm Anna Edwards in London. Now, let's talk climate. US climate envoy John Kerry says that Russia's move to weaponize energy exports should also convince nations to accelerate independence away from fossil fuels. Kerry exclusively spoke with Bloomberg's Haslinda Armin in Hanoi.
Well, fuel, gas, oil, has been weaponized by President Putin. Now, in war, obviously people go to extremes because of the stakes.
What is the best stopgap measure, you think? Because we know that the U.S. has suggested exporting fossil fuels to fill that gap in Europe. Is that not a contradiction to what you're pursuing,
No.
which is clean energy?
It's not, as long as it is temporary, as long as it is accompanied by a huge uptick at the rate and the amount of renewable energy that is being deployed. You say, what is the shorthand, quick take out of this? It is, be as independent as you can in your own energy grid. Get your renewables out there. Begin to wean yourselves from the weapon that is being used against you, which is the dependency on fossil fuel and gas.
The thing is, as a result, even Germany is investing in gas facilities right now.
Yes, they are, but here's the way we at least look at it. There will be gas and oil pumped for some period of time, no matter what. That's cooked in to the rate at which people are now saying we will reduce our emissions. Net zero by 2050. You can do that by using gas to some degree if it replaces coal or replaces oil. Why? Because gas is 50% less polluting. So for a period of time, if you're using gas in place of coal, that's a gain. That's a reduction in emissions. But after you reach 2030 or somewhere in that vicinity, in order to get to net zero by 2050, you must be reducing the emissions from the gas. And remember, it's only 50% less, not 100. So it's still emissions problems. And I think President Biden understands, and his policy embraces the notion, we can use gas to transition, but it must be transitional or capturing all of the emissions. And so replenishing some of what we needed to keep Europe and its economy humming, or to heat homes in very cold places and so forth, that will be necessary in the short term of the transition. But nobody should be fooled into thinking, oh, wow, you know, because of Ukraine, we can just forget about going ahead and dealing with the climate crisis. No, no, and no. I'm convinced the world is going to get to a net zero carbon economy. We will get there. The challenge is, will we get there in time to avoid the worst consequences of the crisis? And right now, as you and I sit here, that's not happening. That's our challenge. And over the next weeks, as we go to Sharm el-Sheikh, as we come together in New York, we must agree to accelerate the provision of funding, the sharing of technology, the targets that we're setting in our countries have to grow. We've got to treat this like a war. I mean, literally mobilizing every facet of our economy to deal with it.
That was the U.S. Special Envoy John Kerry speaking there with Bloomberg's Haslinda Amin. Coming up on this program, we'll get an update on politics, but not in the U.S. In Kenya. Kenya's Supreme Court weighs a challenge to the recent election results. We're starting to get some headlines coming through. We will get a rundown of what you need to know next. This is Bloomberg.
Hydrogen has a very special place in the universe. It's the first element on the periodic table. It is the most abundant element in the universe. And when clean energy advocates think about what can we find which would be as easy to use as fossil fuels, they think about hydrogen. The fuel that will, when burned, only produce water.
We like to imagine that if we just built enough of these and these, we could ditch fossil fuels and save the planet. Unfortunately, it's not that simple. There are some things where you just need good old-fashioned combustible fuel. Now, startups around the world are betting that hydrogen can become the fuel of the 21st century.
The future of the entertainment business. Where do you think it's going? You think there's going to be movie theaters forever?
Anybody that says to you, and I won't name names, that says the movie business is over, are fools.
Welcome back to Bloomberg Markets. I'm Anna Edwards here in London. A special edition of Bloomberg Markets today because, of course, it is a public holiday in the United States. European equity markets under pressure from higher gas prices, but there's politics elsewhere. Let's talk about Kenya. Kenya's Supreme Court delivering a judgment today on a suit that could overturn the results of last month's presidential election. Bloomberg's David Malinga joins us now to take us through the details. David, I see a couple of news lines coming through from the Supreme Court, but no overall decision just yet. So what are we expecting to hear today?
Yeah, thank you. I mean, they have started delivering the judgment. Of course, this came about after Raila Odinga, the opposition leader, rejected the outcome of last month's election, where he lost to the Deputy President, William Ruto, by a very narrow margin. So the lawyers closed their arguments on Friday, and what they're doing is delivering the judgment today. There are 9 issues that they have to rule on. They have gone through 3 so far, so more to come. And then after this, probably in the early afternoon, we will have the Supreme Court President, Justice Martha Koome, deliver the final verdict.
Okay, and so if Raila Odinga is successful in this legal action, if we do see a nullification of the vote that took place recently, if we see that, David, what would happen then?
If we see a nullification as per the Constitution, it means that Kenyans have to go back to the ballot within 60 days. I mean, as for markets, more notably, like we have seen in the previous election that was nullified in 2017, there was a swift reaction with the shilling taking a hit, and then the bonds also taking a hit. And it's been quite evident within this election season. Any event that has introduced some kind of uncertainty, even when Raila Odinga rejected the results and went to court, we saw a swift reaction in terms of the yields on Kenya's Eurobond, really going up almost instantly.
Okay, so obviously, yeah, we watched the Kenyan shilling and yields on Kenyan debt. We have, as you mentioned there, we've seen nullification of election results in the past in Kenya, and we've seen tense political situations develop, violence on the streets, for example. My understanding is that this has been fairly violence-free so far, but what are the fears around that?
Yeah, I mean, Kenya has had, a checkered history, especially with, vote-related protests. They have been bad in the past, particularly the one that happened in 2007, where very many people died. But this year, the election season has been largely peaceful. Before the election, during the campaigns, during the election, and then after the election, there were a little bit of skirmishes. On the day the result was, declared, but after that, I remember driving around in the evening, and really people had gone home. And even this time, both Raila Odinga and William Ruto, who, if his win is upheld, will become Kenya's 5th president, have both said they will accept the verdict, which really, to their supporters, indicates, let's go back to work after this, or let's go for another election after this.
Okay, David, thank you very much for the update. Bloomberg's David Malinga joining us there with the latest on Kenyan politics. A lot to watch out for then. As he pointed out, we've heard 3 of the 9 arguments by the Supreme Court so far. We will wait for the others to be delivered, the other decisions by the Supreme Court, and get to a final verdict on whether that election stands from last month or whether it will be nullified. Back to the markets closer to where I am in London and to European equity markets and beyond. Let's have a look at where we are right now. The European equity story is pretty negative. I've got the DAX in this market check for you, down by 2.3%, certainly bearing the brunt of the selling that we're seeing here in Europe. The CAC 40 down 1.5%. The FTSE 100 a little more protected, down 0.7%. But that is, of course, to do with exposure to energy stocks. Over in Germany, it's chemicals, industrials, consumer discretionary, utilities, all of those being hit, the latter, of course, because of the news around a windfall tax over the weekend. We have the euro under pressure because of the same story, down by 0.3%. And the story we're talking about here is Gazprom cutting off the supplies through the Nord Stream pipeline. So other pipelines go to Europe, to Hungary, and to Ukraine. But the Nord Stream one, which is so crucial for Germany, that's the one we're not seeing flows through anymore. And as a result, we've seen a 24% jump in the natural gas price here in Europe, really recouping some of the losses that we saw during last week's sessions. And I've got yields in there as well for you. The 2-year yield here in the UK jumping on this uncertainty, also political uncertainty. More on that coming up shortly. This is Bloomberg.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy. I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
When you've had your fill of IPOs, ETFs, and CPI,
tune into the lineup for some NFL, NBA, and MLB. Did you retire too early? I mean, look at some of these payouts.
I absolutely retired too early.
For the inside scoop on sports betting, catch the lineup right here on Bloomberg.
Welcome back to Bloomberg Markets, a special edition of Bloomberg Markets. I'm Anna Edwards, live in London. US equity markets are closed today, of course, but European equity markets are up and trading. And it's a really risk-off session. Let's get an update on where we are right now. The gas price jumping this morning here in Europe, up by 23.8% on the European benchmark. We've been as high as 340 euros per megawatt hour earlier on this year, so we're not there, but certainly a big turnaround from the weaker price we saw last week. That was driven by better news around stockpiles. Today looks very different as Gazprom cuts off flows through the Nord Stream pipeline indefinitely. The DAX is down by 2.4%. Other markets also negative, but not by quite so much. In Germany, we see utilities being hit because of talk of windfall taxes there. We also see consumer discretionary and industrials being hit because of concern about energy supply. The euro under pressure off earlier lows. We did have a 0.98 handle. Now we're at 0.99, but still not far from parity, down by 0.3%. In the week that the ECB has tough decisions to make around interest rates, and the UK two-year yield reflecting a bit of nervousness around UK politics, but also the broader gas story. Let us get an update on that gas story. Europe's energy crisis deepens as gas prices jump then 30% after Russia announced a late decision on Friday to keep its main gas pipeline shut indefinitely. Bloomberg's Will Kennedy joins us now. Will, good to speak to you. We've got some gas flowing from Russia into parts of Europe, into Hungary and into Ukraine, but this main gas pipeline, Nord Stream 1 cut off, this makes all the difference going into winter.
It does, because it links Russia directly with Germany, and Germany is Europe's largest economy and particularly dependent on Russian gas. Now, Germany had been moving to try and deal with the situation as best it can, filling up its storages, looking to reduce demand, but traders had expected this pipeline to come back, albeit at a vastly reduced level, about 20% of capacity, and they're quickly having to adjust to a situation where it looks like even that limited flow won't happen.
Yeah, Olaf Scholz, the German Chancellor, saying over the weekend he's confident there will be no blackouts. But where does it leave us? If we have no flow now, we're not at the November target for storage, obviously, because we're still in September. But even if we did have that November target of 95%, some say that's not going to be enough.
Well, it will be a question of early winter and late winter. I think in the early part of the winter, clearly those storage levels, which are relatively healthy, will come into play, and Germany will be able to reduce run down those stockpiles to supply businesses and households. In the second half of the winter, they will largely be consumed without the ability to bring in enough gas, because their ability to import LNG remains constrained, and they won't have the Russian gas. So the second half of the winter could be difficult. A lot will depend on the weather. And even if there are no blackouts, economic damage is being done, because at these prices, a lot of German companies, and indeed industrial users throughout Europe are reducing consumption, and that is going to have an impact on the European economy.
And just briefly, we've got oil prices going higher this morning, 95.61 on Brent. There's a little bit of talk of substitution, power being generated through oil instead of gas. That's just part of the story, though, with oil. That
is just part of the story. I think people are very focused on the OPEC meeting that's happening later today. Clearly, Saudi Arabia has come into the market last couple of weeks to say we will let prices only fall so far, perhaps. You know, they're worried about this disconnect between futures and physical realities, and they may make a symbolic cut today just to show that they mean business.
Okay, thanks very much, Will, for the update. Will Kennedy joining us there with the latest on energy markets. Let's get an external perspective. Joining us is Joost Beaumont, who is Senior Fixed Income Strategist at ABN AMRO. Joost, nice to speak to you. So is your base case assumption a recession for Eurozone economies at least? And how deep does it go? How long does it last? Is it possible to answer those questions yet?
Yes, it's definitely possible to answer those questions. Now, our base case is indeed for Eurozone recession linked very much to what you were talking just earlier, the gas supplies and likely some rationing of energy supplies in the Eurozone, like Will already mentioned, that will do a lot of damage to companies. Of course, they will see margins squeezed. Some will, for some, it will not be viable to keep operating. Now, I can explain a little bit more later, maybe, but of course, the high energy bills will also hit households very hard. So disposable income is eroding. So we will clearly see declines in consumption and investment. And we actually expect the recession already to start in the Q3, so this quarter, but to deepen in Q4 and Q1. So there's a harsh winter ahead of us.
A harsh winter ahead, Joost. Do you see any investment opportunities around Europe, or do you look elsewhere?
Yeah, in terms of investments, it's of course pretty difficult to take real positions at the moment. Volatility is at the moment name of the game. We saw it, say, last week in the Euro bank debt market, where there were 2 days issuers issued a lot of new deals, while after that the market was shut again because of weak openings in equity markets. So it's really volatile times, but and definitely saying there's many headwinds ahead of us, and that makes us to remain cautious on investment. So preferring a bit the stronger names and also a bit shorter duration. So there are, of course, options, but we remain pretty cautious.
How would you expect yields to respond? Debt markets, I'm thinking sovereign debt here, used. How would you expect them to respond to announcements by European governments to do something to cap energy prices? Because on the one hand, the bond markets, I guess, might like to see something done to shore up growth, but on the other hand, they might be nervous that governments, taxpayers will be left to foot the bill. So how do you expect bond markets to respond?
Now, like you see, it's indeed the bond market is really torn apart between the inflation story, central bank hikes that will lead to higher rates, and of course the recession fears that will in the end lead to lower rates. We have seen, of course, Germany coming with a package announced yesterday. Also in the Netherlands, the government is looking for a package to be published on budget day in the coming weeks. Although these packages have been done like on a budget neutral way, so they don't have too much impact on debt issuance of countries. And overall, if we look at, say, the longer term rates, at the moment the markets are pricing in more rate hikes for the ECB than that we price in. So that could lead to a bit of lower rates in the coming months.
Do you think the window for
these rate hikes?
Yeah, do you think the window for ECB rate hikes is short, and is it shrinking, Joost?
Yeah, definitely. It's of course on first day it's a bit baked in the cake. The 75 basis points. The Hawks clearly being dominant now in the governing council. But the more we move towards the end of the year, the more it becomes clear how bad the recession will be, and we expect quite a deep recession. So towards the end of the year, the ECB will be in a much more difficult position to to really continue hiking rates very aggressively. So that's also why we think the rate hike cycle will already end in December.
When you look at the United States, Joost, the argument for putting up rates even at a time when maybe the consumer is already going to be struggling with higher energy bills, the argument is even if the inflation is driven by the supply side, there's quite a lot now being driven by the demand side. So you weigh down on aggregate demand to try and have it match supply in some sense. Does the same argument hold in Europe, or is this entirely being driven by the supply side?
I think most of the inflation that we see now is indeed driven by the supply side. And of course, what will happen, like I said, households will be faced with very high energy bills. So there will be more and more households having difficulties in paying their bills, like companies as well. So it's driven from the supply side. And also, I think a big difference between the US and Europe is that wage growth in the US is much stronger than in Europe, where it's still remaining relatively modest. And also, if you look, the outlook for the consumer is actually pretty dire, because on the one hand, household purchasing power is lower, but on the other hand, we also do expect unemployment to start rising. And of course, that also hampers the growth in wages. So it's in the end, households in Europe will be faced with much sharper declines in their purchasing power than in the US.
September is usually a really busy month for corporates in many parts of the world, coming forward with issuance, trying to raise money. We were hearing earlier on in the program from one of my colleagues who was suggesting that's not happening to the same degree here in Europe this year. What would you expect to see there?
You see, in terms of, say, the riskier debt of companies, but also in the financial
Hello,
world,
traders. How are you doing
looking
today? All of you guys who want to trade euro, here is the chance. You can. I'm placing an order to buy euro against United States dollar. The price I'm looking to buy 0.9920. It's not far away. So if you're looking to trade, please place your order to buy at this level. Okay. And wait, what's going to happen next? I will let you know after we will get filled with this order. For time being, order placed, and I'll speak to you later, guys. Stay safe.
Joost, thanks very much for your time. We do appreciate it. Joost Beaumont joining us there from ABN AMRO. Let's get you up to date with all the news from around the world. Here's a First Word News update with Laura Wright.
Thanks, Anna. The results of the contest to succeed Boris Johnson as Prime Minister will be announced shortly, with the winner taking over after a meeting with the Queen tomorrow. Foreign Secretary Liz Truss is the odds-on favourite to win and will come into office facing a brutal economic storm. President Biden's top climate envoy says he's hopeful that climate talks with China will resume after discussions stalled following House Speaker Nancy Pelosi's visit to Taiwan last month. Speaking exclusively to Bloomberg in Hanoi, John Kerry said the US and China must restart talks because, quote, that will shape the response of other countries around the planet.
We've got to treat this like a war. I mean, literally mobilizing every facet of our economy to deal with it.
China suspended climate change talks with the US on August the 5th as part of a series of what it called countermeasures to show its displeasure with Pelosi's visit to the country. Europe's energy crisis is deepening. Gas prices surged more than 30% today as traders reacted to Russia's decision late Friday to keep its main gas pipeline shut indefinitely. European Union energy ministers are preparing for an emergency meeting this Friday where a number of special measures to rein in soaring prices will be discussed. China has extended its lockdown for most of Chengdu's 21 million residents, with all indoor entertainment venues, schools and dine-in restaurants remaining closed. All of the country's 31 mainland provinces recorded at least one local COVID case over the past 10 days, reflecting the broadest outbreak since at least February 2021 when disclosures started. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg. Anna.
Laura, thanks very much. Let's have a quick look at where we are on the markets then for you.
Sorry.
European equity markets under pressure from one of the stories that Laura was talking about there, and that is to do with higher gas prices. There you see it. Laura was mentioning a jump of 30%. That was certainly true this morning. Pairing that jump just a little bit, the European benchmark up by just shy of 22%. The UK number up by 26% as well. So we do see a lot of moves higher in energy prices across the European continent. The DAX is down by 2.2%. Industry and consumer discretionary and utility companies coming under fire. The euro weaker, 0.3% lower on the euro, off its earlier lows though of 0.98. It hit a two-decade low earlier on in trading. And we've got the UK two-year gilt yield. I could have put in the Italian 5-year, the French 2-year, the German 5-year. All of those yields are jumping. Coming up, we'll get more on the UK political story, more on what we can expect after we hear who is going to be the next UK Prime Minister, expecting to get that decision a little bit later on today. The Conservative Party have been voting on who will replace Prime Minister Boris Johnson. We'll get an update for you shortly. This is Bloomberg.
These floating flowers are made of 92,000 solar panels. Laid on the surface of a reservoir, they can generate 41 megawatts, which is enough to power 20,000 homes. It's one of the biggest floating solar plants in the world. Floating solar arrays have been gaining traction in Asia, including countries like Singapore and Thailand. Floating projects typically benefit from an easier connection to the power grid. They can also restrict algae blooms while keeping the solar panels cool. This one in particular has helped the local economy. When the power plant was first proposed, residents were given the chance to invest. Some locals were also offered jobs during construction. In fact, it was the community that requested the panels to be shaped as flowers to look more appealing. South Korea still relies heavily on imported fossil fuels, but will need to change that to reach its goal of becoming carbon neutral by 2050. Solar plants like this one may help the country reach its net zero goals.
The markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg. When U.S. jobs numbers are released,
numbers are pretty much in line with what Wall Street expected.
Bloomberg brings you crucial data at terminal speed.
315,000 jobs created an optimistic number for the Federal Reserve.
And instant expert analysis.
Dare I say that this might be called a Goldilocks jobs report?
What this does is really push away a lot of the arch gloom.
Maybe leading us toward a soft landing.
The Fed is still going to be debating 50 or 75 basis points.
Nobody covers jobs day like Bloomberg, your global business authority. Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Welcome back to Bloomberg Markets, a special edition of the programme this Monday because it is a US public holiday, of course. I'm Anna Edwards, live in London. Let's talk UK politics. A lot of uncertainty hanging over the UK economy right now. Britain's next Prime Minister is set to be announced just about an hour from now. It's a face-off between the Foreign Secretary Liz Truss and the former Chancellor of the Exchequer Rishi Sunak. For more, let's get to Downing Street. Bloomberg's Lizzie Burden has an update for us. When are we expecting to hear what, Lizzie?
Well, Anna, in just under an hour, about 12:15 to 12:30, we'll find out who will be the 56th Prime Minister of Britain, the fourth in 6 years. It's expected to be the third female leader in British history. Liz Truss widely expected to win this race. But of course, she's inheriting an economic situation that's bleak, double-digit inflation that's only set to climb. The UK headed for a recession, as we saw in the PMIs this morning. That risk is only increasing. But the next steps in this choreographed dance are that Boris Johnson tomorrow morning will make his farewell speech. Then both he and whoever wins the contest will head separately to Balmoral, the Queen's Scottish castle. It's a break with tradition, but given her mobility issues, needs must. Then the new leader will come back, and if it's Truss, she's expected to focus on the urgency of the cost of living in her speech. And then on Wednesday morning, she'll meet with her new cabinet to discuss how to deal with it before heading to her first Prime Minister's questions. But really, the challenge once she's in is staying there, because a general election must be called by January 2025, and appealing to the general public is going to be a very different challenge to winning the minds of the 160,000 or so Tory voters who will pick the next leader.
Lizzie, thank you very much. Bloomberg's Lizzie Burden fighting with many other media voices in the background there to tell the story of UK politics today. So we wait until early this afternoon to hear more. Matthew Goodwin joins us on set here in London. Professor Matthew Goodwin, Professor of Politics at the University of Kent. Very good to see you in studio with us then, Matthew. Do we assume Truss as Prime Minister then? Is that the assumption you're making?
Well, all the polls are suggesting Truss is going to become our third female Prime Minister, our fourth consecutive Conservative Prime Minister, and a leader who has got probably the most daunting in-tray facing any Prime Minister since Margaret Thatcher was elected in 1979. I mean, it's not just the energy crisis, that's a big part of it, but remember, Truss was not actually backed by a majority of Conservative MPs, so even within the Conservative tent, she's got some really big challenges, and in the polls, for the Conservative Party, things are looking pretty dicey. They're averaging only 31% of the vote.
Thinking of the challenges she faces, there are clearly plenty of them. We've talked a lot about cost of living and the gas price surging once again this morning. How she manages could be difficult as well. When you look at, yes, she's got a decent majority in the House of Commons. You can remind us of the number. But does she have the sort of moral authority that Boris Johnson brought with him with his big victory with the public in 2019? Things are different.
Yeah, so Truss has a majority of almost 80, the biggest Conservative majority that we've seen since the Thatcher years, but there is this rift within the Conservative Party that remains unresolved. There are the sort of so-called One Nation, more liberal Conservatives who want to sort of chart a more perhaps centrist move within the party, and then there are the sort of Johnson loyalists, the sort of more openly pro-Brexit faction within the party who actually want to get back to what they would argue are true Conservative principles. They want a tough position on the EU, they want to deal with the small boats in the English Channel, they want to perhaps lower migration, they want to get back to fiscal conservatism, Thatcherite economics and so on. That rift, I think, is going to become a hallmark of the Truss premiership, and she's going to somehow have to find a way of bringing these different factions back together, and it won't be easy. And of course, hanging over all of this will be Johnson himself. I mean, yes, he's going to be quiet for the next 6 months, 12 months, but I suspect he will also be back as a prominent voice on the backbenches in the near future.
Okay, and will we look for clues as to how she plans to hold this Tory party together? Look for clues in the formation of the cabinet that she puts together?
Yeah, I think so. Here's a basic problem facing the Conservative Party. They have lost about half of the people that voted for Boris Johnson in 2019, and they're losing a large number of working class voters, Leave voters, pensioners, non-graduates, all of whom are key to the political realignment of British politics. But they're also at the same time now really losing what support they had left among university graduates, middle-class professionals, Londoners, people on the outskirts in the commuter belt. So somehow Liz Truss has to find a message that can bring back those groups, can unify that 2019 coalition, and she's hoping, firstly, that her big energy plan at the end of this week is going to show all of those voters that she's got a plan for the energy crisis. But beyond that, she's going to have to find a message that can really rally these very different factions within the Conservative Party, because if she doesn't, Anna, on the current numbers in the polls today, if there were an election held tomorrow, there would be a comfortable Labour majority, and that would introduce a lot of interesting debates about electoral reform and all kinds of things that we haven't really discussed for a long time in British politics. So the stakes for Truss are enormous. I mean, it's a really big moment in British politics.
We're not likely to see an early election then, if the polls are to be believed, if they're working off the same polls. Is that right, or is there more complexity to that decision?
I think it's very unlikely we'll see an early election. As your colleague just pointed out, we're likely to see some considerable economic turmoil over the next 6 months, 12 months, perhaps longer. What Truss will want to do going into that next election is say to the country, look, the worst is behind us. Don't let the opposition ruin it. Stay the course, stay focused. It will be a reboot of the David Cameron plan in 2015, right? Don't let Labour ruin a strong, rebounding economy. But of course, she has to therefore win her gamble, and her gamble is by presiding over low tax cuts, by presiding over a new plan for prioritising economic growth, that's actually going to deliver, and it's not going to stoke more inflation. And this is a huge gamble, as your colleagues at Bloomberg will know.
She's only had to be popular with the Conservative Party so far to get this far, the party, the MPs themselves, and then with the membership. Now she has to try to be popular with the country. And some of the polling, you've pointed to this already, doesn't look great for her. A YouGov poll over the weekend saying 12% think she'll be good or great, 52% say that she'll be poor or terrible. I mean, how do we think she'll go down with the wider British public?
Truss's problem is she may be stained by the legacy of Johnson. She's going to have to draw a line between herself and the previous administration. That's task one. A lot of people in Britain are fed up with the Conservative government, and that's why Labour are holding 15, 16-point leads in the polls. Now, of course, they've held bigger leads in the past. Some of your viewers will remember Tony Blair in the late 90s holding 28, 30-point leads. But the Conservatives are in a very, very weak position at the moment. So Truss is going to have 5 minutes with the country this week. She's got a 5-minute conversation, and she's going to have to explain to them why she's different from Johnson, what she believes, and how she's going to address this current economic crisis. And then voters will basically tune out again until the next general election. And that's why this week is absolutely critical. She's going to have a detailed plan for the energy crisis, but also, where does she want to take levelling up? How's she going to fix a productivity problem? What about growth? What about our new global Britain and the trading relationships with non-EU countries?
Okay.
Big stuff.
No doubt she's taking notes then for her 5 minutes. We will see what she has to say. Matthew, thank you so much. Professor Matthew Goodwin joining us there from the University of Kent. Coming up on the programme, we'll get back to the European energy crisis as a whole. As the EU weighs special measures to rein in soaring energy costs, will we see a cap put on gas prices? This is Bloomberg.